But there's a level of seriousness in all jokes. Okay. It is 3:01 according to my watch. So I'm going to go ahead and call our agenda meeting to order. Today is Tuesday, November 19th. This is the Town of Southern Pines monthly agenda meeting. We have moved it a week forward or closer due to the Thanksgiving holiday. So I appreciate all of you with your adjustment to schedule, your flexibility. If you all stand with me, we will do the Pledge of Allegiance. I pledge
allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
Thank you. Okay, I will now turn it over to our town manager, Manager Parsons, for his comments.
Thank you, Mayor Clement. I really have very little to say this evening. I think the agenda is pretty self-explanatory. If you are good with the way in which it is laid out as far as order of topic, I would simply ask for an adoption of it, and we can move right into discussion of the audit.
Okay, that sounds good. We don't need to approve the agenda or anything, do we?
You don't have to if you don't wish to make any changes to it.
No, no, I'm good with it as is. So why don't we start with our audit?
I would ask for Finance Director Spies and then Chad Cook with, and I'm going to mess the name up, Forvis Mazars, our audit firm, to come forward.
Thank you. And yes, again, my name is Chad Cook. I'm an audit director with Forvis Mazars out of our Winston-Salem, North Carolina office. And I'm here today to report on the results of the fiscal 2024 audit for the town, which is the period from July 1st, 2023 through June 30th, 2024. Each of you should have access to an electronic copy of the final draft of the fiscal 2024 annual comprehensive financial report. The final report is to be issued this week, following this meeting. High level, as a result of our audit, we are issuing an unmodified or clean audit opinion again this year. This year we did not have a federal single audit, so you may recall in the past certain years, if your federal expenditures exceed $750,000 for the year, we have to do a compliance audit in accordance with the uniform guidance. We did not have that type of audit this year because of the funding sources of the town. The town did receive some ARPA funding that was expended, but there's sort of a special carve out for ARPA funding where instead of having a single audit, you can do a separate compliance examination that's a little bit less in scope. So that is going to be completed following the completion of the audit. So we still have that to go, but because of that carve out, you don't have this separate single audit requirement. On the other hand, there's also a state single audit requirement for your state programs. This year we did have a single audit for state purposes, and we had to test the Powell Bill program. That's because the town had more than $500,000 in expenditures for fiscal 2024 within that program. And as a result of that, we do not expect to issue any findings related to non-compliance with the Powell Bill or any internal control findings related to compliance with that program. We do like to point out that our audit's also completed in accordance with government auditing standards or the Yellow Book because of the federal and state funding sources that the town receives. As a part of that audit, we're required to report if there are any significant deficiencies or material weaknesses in internal controls that we identified during the audit process. That's something we have to include within the report. This year we did have one item that we believe to be a significant deficiency related to the accounts payable cutoff process, and we'll get into that in a little bit further detail here in a minute. We're also required to report, if there was any non-compliance that could have a material impact on the financial statements. We would be required to report that as well under the Yellow Book, and we had no such instances during the fiscal 2024 audit. So there's a couple documents that you received. I already mentioned you've got the financial statements. We're not going to go through, obviously, the full annual comprehensive financial report, but we did send out an executive summary, which is just a two-page summary that gives you some highlights in terms of fund balance, revenues, expenditures, et cetera, for the general fund, and then also for the utility fund. I've got some comments prepared regarding kind of some of the reasons for the changes that you'll be seeing between those fiscal years. But before we jump into that, I do have some required communications. So following the completion of the audit, you all will receive a report that's titled Forvis Mazars Report to the Town Council and Management. It's got just a lot of information that we're required to communicate. I'm not going to go through the entire document. You will receive that again, and us just sending it will kind of check the box on that requirement, but I do like to point out a few of the more significant things within that, so I'm just going to kind of read through some of that. First, again, our report covers the audit results related to your financial statements as of and for the year ended June 30th, 2024, in accordance with our contract dated May 28th, 24. Our responsibility as the auditors is to make sure that that the financial statements and conform with GAAP, which is the generally accepted accounting principles within the United States as it relates to the town. That would be the GASB standards. And we're required to determine that they are materially correct. So our audit does not include a detailed audit of every single transaction of the town, as that would take forever. So certainly materiality plays a role, within the financial statements. So that there may be errors that were not identified in the audit process, but again, we believe that these financial statements are materially correct for the financial statement users.
Is the executive summary the independent auditor's report, or is it called executive summary?
It's titled executive summary, and it should just be, I believe it's just a 2-page PDF.
It's the document that was in your packet. There's a little
okay.
spreadsheet in the packet.
Gotcha. Okay, it's not in the draft.
No,
Okay.
no, it's an
All right.
executive summary that was
Gotcha.
part of the packet that went out on Friday.
Sorry to interrupt.
Another thing from that report that I would like to point out, there is other information that accompanies the financial statements. So because the town prepares an ACFR or annual comprehensive financial report, there's information included in the financials, including an introductory section, as well as just statistical information that's at the back of the financial statement. So it's got things like demographics and who are the largest employers in town and what's your property tax base look like. Those are not required, or that's not required information in your typical just GAAP financial statement. You can elect to present a full or to compile the full ACFR. We just like to point out that our audit does not cover the information in those sections. Certainly, if there's anything financial, we read through it and we make sure that it ties back to the information that we did audit, but we're not auditing the number of citizens within the town, for example. That's information compiled by management, and it's in the report, but we just like to point out that our opinion does not cover that information. One other item we'd like to point out, we do like to mention that inherently within financial statements there are estimates that go into the financial statement preparation process. Some of the more significant estimates that we believe are within the town's financial statements include number one, the depreciable lives of capital assets. So your management estimates how long capital assets are going to be useful to the town, and then those assets are depreciated over those lives. It is a significant estimate. Should an asset last longer or not as long as your original estimate, it could cause a material swing within the financial statement figures. We obviously look at those, make sure that they're reasonable and just in accordance with industry standards, which they are. But nonetheless, like to point out that it is an estimate. Some other estimates, there's also liabilities related to pensions. As well as the related deferred inflows and outflows. So the town participates in the local government employees retirement system pension plan, and there's also a separate law enforcement officers special separation allowance. Every year, those are getting valued by actuaries, but obviously there are significant estimates that go into those reports, and those liabilities can swing pretty wildly year to year based on market performance of the underlying investments, discount rates, the interest rate environment, things of that nature. So just like to point out, those are included in the financials, but certainly a significant estimate. The last couple, the value of donated or developer dedicated assets, which is based on projected acquisition values. So the town obviously receives water and sewer lines often that are dedicated from developers. And so those have to be brought onto the books of the town when they're dedicated to the town. That is an estimate, again, based on projected acquisition value. We look over the way that those are projected and make sure that they're reasonable and the calculations are accurate during the audit process. But nonetheless, certainly an estimate. And then lastly, there are discount rates used for discounting lease receivables, lease liabilities, and then subscription liabilities. That would be subscriptions being long-term IT subscriptions, so software contracts that span a long period of time. There's been a couple new standards that went into effect in 22 and then again in 23 related to those items. So they used to not be on the balance sheet, now they are. And there's just an estimation process that goes in on the front end as it relates to discounting those liabilities and then recognizing interest over the course of the terms. The last thing I'll point out within this report is adjustments identified during the audit. So during the audit process, should we come across any adjustments that we believe to be material adjustments as a result of our audit procedures, or if there were any uncorrected misstatements, so misstatements that we identified that maybe management didn't think was material and decided not to book, we would be required to report those. We are not, we have no material audit corrections to report as a result of 24 audit, and there are no uncorrected misstatements. So in other words, any issues that we came across during the audit, potential adjustments, management elected to book those, and so we are not aware of any uncorrected misstatements within the financial statements. All right. Before we jump into the financial summary, there is one item I'm required to report to you all. So you may remember this from last year, but there are, at the end of the audit process, we fill out what's called a data input workbook for the local government commission. And if there are any financial performance indicators of concern, then council is required to provide a response to the LGC related to those items. And so we just basically type in a lot of information from the financial statements and that summarizes the results of the audit and also some of the balance sheet and income statement information. And then they've got formulas built into the workbook that say, hey, this is a potential performance indicator of concern. There's one related to the town's water and sewer infrastructure, so the utility fund, because the capital assets are more than 50% depreciated. So again, kind of going back to the estimate of how long a useful life may be. So for example, if it's water or sewer lines, it may be 40 years. So if you're more than 50% depreciated, it means you're more than 20 years into that 40-year estimate. The LGC considers that to be a financial performance indicator of concern. I'm not entirely sure why. I guess they're just concerned that maybe you've got an aging water and sewer infrastructure and they want to make sure you've got plans in place to make sure that, that you've got plans to address that. And so that will require a formal response to the local government commission. The technical requirement is that you all provide the response within 60 days of being notified. So that would be 60 days from today. So essentially you would have until around January 19th, call it, to provide that response. And it does have to be signed by a majority of the governing members. So the majority of the town council will need to sign the response before it's uploaded to the LGC. And I think Tess, you'll probably handle that piece through their file portal. But just like to point that out, I am required to report that to you all.
That's something that we'll probably have every year because it's an aging piece of infrastructure. Okay.
Say, when you get that reply, which we'll be drafting, it's going to be an awful lot about the fact that the water plant's got some years on it. It clearly didn't cost nearly to build back then what it would today, so the numbers begin to look, but as you are all aware, we are doing some significant rehabilitation and upgrade work at the plant. So I can't say we will necessarily get to the point that the magic 50% or whatever it is will get surpassed, but it is something we're clearly acting on an annual basis as part of the SDF formula, the budgeting and appropriation process, and all the work that is being conducted down at the water plant. Some of it is also in some of this rehabilitation of the sewer lines and things that James is working with the grants on. So we are going to see those ratios improve, obviously, year over year as we continue with these types of projects.
Last year.
I was like, I
I
vaguely
brought
remember
the
signing
response down
something.
here and we
Yeah,
all signed
okay.
it, yeah.
And I will mention as well that every unit that I audit had that last year.
Okay.
So it's not uncommon to see that. I don't know, why they've built that into the workbook, but they have. Maybe they'll reduce the percentage in future years or something to avoid that. But yeah, everyone that I audit has had the same issue if they have utility fund. Yeah. All right. And then the other item that we're required to talk about this year is also what I mentioned at the beginning. We did have one item that we considered to be a significant deficiency as it relates to financial reporting that was identified this year. And it was related to the accounts payable cutoff process. And I'll kind of give you a high level on the Tess and Reagan, if you guys wanted to go into more detail on this, certainly happy to let you do that. But essentially, we came across some issues with construction contract billings, and it was in the utility fund. And so there are longer term, obviously, construction contracts going on, and those tend to get billed on a progress basis. Sometimes it's monthly, sometimes it's quarterly. It can kind of vary vendor to vendor. But we found some in our what we call our search for unrecorded liabilities, where we look at payments that happen after the end of the year. We see if any of these really relate to the fiscal year under audit, were they recorded or not. We found one item. It was not material, and so that's why we're not calling this a material weakness. But nonetheless, we do think it's worth reporting to you all that that we've seen some other items that ran through 2024 that really related to 2023, and it was the same issue. It was I think just cut off with timing on when you're receiving those invoices and making sure that those are being accrued. Tess, I know you had some issues with actually receiving the bills from the vendors in a lot of these situations, so I don't know if you want to go into any more detail on that, but that is one other item we're required to report this year.
Mr. Cook, will you clarify? So we received a draft on Friday and then another draft or closer to final today, and I'm working off of Friday's draft. So there was the cause
Yes,
changed. Can you
yes.
clarify why it
Yes,
changed?
so this is reported within the financial statements. Let's see, I believe it's on page 165 in the most recent draft, and it's called Finding 2024-001. Within the cause, I had an error in there. That was my mistake. I had taken this template from another unit that we had a finding on this year, and I just failed to update that cause line. I believe it said something about administrative access to a system, or it had nothing to do with Southern Pines. The cause was just delays in receipt of construction billings, and so I've updated that within the draft, but did just want to point that out, that that was my mistake, and I caught that, or excuse me, Tess caught that, and I made that change.
Thank you.
And relative to the issue itself, and Tess can certainly chime in, I'd alerted you to this last Friday, and then you'll see in the updated paperwork sent out today, the reply. But as Chad stated, utility fund projects, a lot of them being capital project funds, the largest example of it being the transmission line relocation, which, as you are all aware, was actually a DOT project. We just happened to have 25% responsibility for it under North Carolina general statute. When we finally receive the bill, Tess, as she receives things through August, will go ahead and backdate them into the fiscal year before closing up books for the audit. But this one did not come from the state until September, and when it came, it showed work completed in February. So at best, what we can do, we have made suggestions that a number of bills come directly to finance in the event that they get lost in the shuffle through engineering or something. That was not the case with this DOT bill. It's just going to be a matter of actually calling up vendors and saying, we've got this open purchase order. We believe the work is done. We need an invoice. And what I don't know, to be fair to DOT too, it is entirely possible that while that invoice was dated for work completed in February, that they may have been holding out for punch list items or something along the way. We don't really have an interest in paying it until the project is truly getting closed out, and nobody's interested in making a final payment and closing it out when there's still punch list items to be done. So it's a little bit of a challenge, but we're trying to work internally to at least limit the number of instances of this moving forward.
So you wouldn't have had any idea what the cost was?
Well, we had the estimate, which is what we had you all adopt a capital project fund and fund it. As it turned out, and this is one that we actually, you'll recall, we just closed this last week.
Right.
And the final project came in a little bit under what even that estimate was. And that's one of the other things that Tess has suggested is, as that June date rolls around, if we don't have an invoice, I think her intent is to work through and at least make an estimate of the percentage of completion and try to go ahead and get that booked so that it does show. As I stated last Friday when sending this out, I think an important thing to note in this instance is, materially speaking, there's no bottom line impact. We are still today where we were before this issue came up. It's just that whether it was going to appear in the 24 books or in the 25 books, but it's still the same amount of money, and it was still out of the capital project fund that was set there in the first place for what was recognized as a multi-year project.
So the utility fund, would it have shown a higher balance in '24?
Well, the capital project fund that this was in, it's not even so much the utility fund itself. It was a utility expenditure through a capital project fund that was funded through the utility fund. But no, your UF bottom line was not impacted by this particular bill we're talking about whatsoever. It was within that capital project fund.
So in the capital projects fund, would '24, would it have shown, I guess, more money?
It would have shown money sitting there that hadn't been paid yet because
Right.
it got paid
Right, so it's
when
a
the
wash
invoice came.
at the end of the day,
Exactly.
but
Yes.
'24 would have,
It was made. That adjustment is included.
Made the
within
adjustment.
financial
If you went
statements.
back to your budget book and looked at that capital project fund, you're going to see money there that now on the final audited books will not be there because we backdated it to the year within which the work was done.
are you satisfied with the response that staff's given you as to the?
As far as the corrective action?
Yes.
Yes. And again, I think what Reagan mentioned, the open purchase orders, that's probably the easiest way to do it, right? You've got to track all the different capital projects you've got going on. You know what purchase orders are out there, and so really just making kind of a list to work through at the end of the year. So we may not know when the bill's going to come, but we know what contracts are out there outstanding, and just trying to follow up with those vendors. I know that especially if you're working with smaller contractors, it can be difficult sometimes to track those down. The DOT thing, I think, is probably a pretty unique situation, probably not something you'll run into very often, but just across construction contracts in general, I think that's just a good practice. All right, that was all that I had for my required communications in that report. So the last thing we were going to go through was the financial, or the executive summary, which is really just the financial highlights, comparing the year ended June 30th, 24 to 23, and speaking to some of the reasons for swings there. So starting on the first page of that document, we've got the Roman numeral 1, which is unrestricted cash and equivalents across all funds. So unrestricted cash is up about $447,000 this year, which is fairly consistent, about a 1.2% increase from the prior year. The general fund unassigned fund balance, so unassigned being balances that are not restricted for any particular use or assigned for future expenditures, for example, or committed for other things like capital projects. So the unassigned fund balance is at $11.2 million. Which is about a $449,000 decrease, or about 3.8% from the prior year. That's in line with the overall decrease in the fund balance in the general fund, which was largely due to the funding of some larger capital projects. So before getting to the transfers, interfund transfers, the general fund did add to fund balance, but then it dipped into fund balance a bit because of some of those transfers. Roman numeral 3, the general fund revenues on the budgetary basis. You'll see that overall revenues are up about 8.5%, so 27.5 million versus 25.4 in fiscal 2023. The largest source of revenue, obviously, is your ad valorem or property taxes. Those are at 12.8 million this year, which is about a $620,000 increase. There was a decrease in the tax rate for fiscal 2024, as you may recall. So fiscal 2024 revenues are based on your January 1st, 2023 property tax rates. There was, you all probably recall, especially if you live in town, there was a revaluation done for all of Moore County in 2023. And so there was a large increase in property valuations, which grew to about 4.4 billion as of June 30th, 2024. And so overall, there was just an increase in about 5.1% there in property taxes. Something else to consider is, in addition to the their reappraisal in 2023 is also just increased development activity. So obviously, as you add to your pool of real property across the town, you're gonna have an increase there.
Can you clarify? Sorry. So we're talking about the reevaluation that happened January of 2023.
Yes. So those bills, the January 2023 bills, are due during fiscal 2024. So your property taxes are due typically August and September of 2023, which would be in 24. So the revenues you're seeing this year are your 2023 numbers. Yeah.
Okay. So so we're auditing the numbers for last year, which was the first year that the reevaluation had hit.
Yes.
So the reevaluation plus the additional construction brings us to an increase ad valorem of 5.1.
Right.
Okay.
In addition to any
Annexations that took place.
Yeah. Okay. Okay. Thank you.
Sure. Moving down some other line items, we've got unrestricted intergovernmental revenues are up about 7%, or 522,000. The largest driver there was a $408,000 increase in the local option sales tax, as well as a $116,000 increase in franchise taxes collected in fiscal 2024. Restricted intergovernmental revenues are up 65%, or about $370,000. That's largely related to one grant. So there was a SAFER grant received by the fire department in fiscal 2024, which was $326,000. Didn't have a similar item in 23, so that's what's driving the majority of the increase there. The other thing is the POW bill allocation. So your POW bill allocation increased roughly $60,000 over fiscal 23. So those two things combined make up the reason for the change there.
And we won't see the PAL bill. It won't go down. It stays. Once it goes up, it stays up.
Right. Yep, typically
Yeah,
you have
so
slight
subject to
increases.
state budgetary. The reason that it went up was the state freed up some additional money toward the POW bill. A future state legislature could always pull back on that or something, but it should, point being, at least until that change occurs, the amount that we received in the fiscal year you're looking at now should remain relatively consistent moving forward.
Other line items with more significant swings, we've got permits and fees up about 21%. There was a $109,000 increase in inspection fees, and then also a $47,000 increase in fire and police department related fees, impacting the increase there. And then lastly, the only other one I'll point out is investment earnings, which did increase about $290,000 or 41%. That's related to basically just your increased performance on the North Carolina Capital Management Trust accounts, as well as just increased interest rates down as CDs and some investments there. So there was an increase in interest earned from 2024 compared to 23. Moving down, Roman number 4, the expenditures. You'll see overall expenditures were up about 13% or $2.8 million for fiscal 2024. As far as departments with some of the larger swings, it's really just a couple. We've got the general government department is up 1.8 or call it 1.9 million or 30%. That's largely driven by capital outlays. There was a $1 million increase in capital related outlays paid out of the general fund in that function for 2024. Including there was a $692,000 increase in public works and then a $530,000 increase as well in just salaries and employee benefits in that department. So those things kind of led to the increase there.
That's the creation of your environmental services department and purchase of the vehicles.
For public safety, expenses were up about 1.17 or 13%. Of this, there was about a $478,000 increase in the police department salaries and benefits, and then similarly a $511,000 increase in the fire department. So largely those are driven by personnel costs in that department. Other departments are fairly consistent. I believe the only other one maybe to point out would be economic and physical development. We did have a decrease in that department of about 10%, and that was largely related to a decrease in professional services account, which was about $160,000 decrease from 23 to 24. That account was used for the comprehensive long-term plan update fees in 2023, and so as that project winded down, we didn't see similar activity in 2024. So that's largely what drove the decrease in that department. Moving down, general fund, other financing sources and uses. There was $290,000 of additional debt issued during 2024. This is not typical debt. This is leases and subscriptions that were entered into. So because those are on the books as long-term liabilities now, that's considered issuance of debt. And so there was $66,000 of additional leases entered into in 24, and then IT subscriptions of about $224,000. Transfers to other funds that were close to $5 million at $4.98 million for fiscal 24. That includes a $2.57 million transfer to the fire trucks purchase capital project fund, and then also $1.2 million to the paving project capital project fund, among some other smaller ones. But those are the two more significant transfers that hit the general fund this year. Overall, there was a decrease in the general fund balance of $1.85 million this year. And then lastly, looking at Roman numeral 7, this gives you the percentage of unassigned fund balance within the general fund as compared to the budgetary basis expenditures and other financing uses. Other financing uses being your transfers, essentially. And so that percentage is at 45.43% this year versus 53.3% last year. That is a decline, but I think you just want to keep in mind that there was significant, the transfers factor into that number. So exclusive of the transfers, I don't think that number would have declined quite as much, but because you have those transfers factoring into the calculation, it did dip this year.
Also keep in mind that 53.37 is representative of when the funds were transferred from what was formerly ARPA and became revenue replacement. So a lot of those got spent down with the purchase of the fire trucks for cash, and that's a lot of this swing from year to year.
And that's the number that we want. We're required by North Carolina to keep it above something like 10%.
Yes, so I believe the minimum is 8%.
8%.
That would be dangerously low.
No, that's fair.
Down there.
Our goal is to have it at
Your
something like
policy is
25.
25. Yeah, so you're certainly in excess of the policy. But I will say for the local government commission includes some information for other units within the data input workbook, and I believe for this figure, the unit average is 46%. So you're pretty close to the average across North Carolina there.
When you say unit average,
So just
Are we a
other
unit?
municipalities
Okay.
within, yes,
Okay.
yeah, other municipalities with a similar population.
okay,
Yeah.
thank you.
All right, moving on to the second page, this is the water and sewer fund. Again, just some high level information there. We've got operating revenues at the top. So number one, charges for sales and services, which would basically be your water and sewer fees, increased 12.1%. Something to keep in mind, there was an increase in rates of 4% during fiscal 2024, but there was also an increase in usage, including a 51% or $405,000 increase in bulk water sales for the town in fiscal 2024. So that's largely what's driving a lot of the increase.
And clarification on the bulk, it's not that we sold excessively more additional gallons. You'll remember that we renewed our contract with Moore County and significantly brought that rate up to our other bulk water agreements and our local rate to our customers. So a good amount of that delta was additional funds from Moore County on similar amounts of water sold to them.
All right. Then looking at operating expenses, by department, you'll see billing and collections was up about 9.1%, or $50,000. $38,000 of that was a result of an increase in card processing fees within that department.
That's the online.
Right. So just seeing more online payments on utility bills resulting in,
We
yeah.
just launched a program for that. So that's what that is.
All right. Let's see, water treatment, sewage treatment, those are fairly consistent, 1.9% increase in water treatment and 2.4 in sewage treatment. Water extensions and maintenance did increase 371,000 or 32.5%. That figure does include the water and wastewater AIA grant expenditures of $215,000. So, the asset and inventory assessment grants that were received running through one of the capital project funds does get consolidated with the utility fund in the financial statements. Because those expenditures are not going to result in actually a capital item, they get expensed as those expenditures are incurred. So you've got grant funds that are offsetting those costs, but it's leading to an increase in the costs in that department. And again, that's about $215,000 this year. Sewer extensions and maintenance, fairly consistent, about a 5% increase. Lastly, charge out for administrative expenses. That's a budgeted amount, so you'll see a 14% increase or $169,000. That's increases in internal charges from the general fund. So every year you decide, you set a budgeted amount for how much the general fund is going to charge the utility fund for those administrative costs, and then that's recorded within the utility fund. So that was a budgeted number, but nonetheless up 14%. Moving down, non-operating revenues, you see those are at 2.48 million, which is about an 18% increase. 140,000 of that is a result of an increase in interest earnings. So the interest earnings is included in that line item here. So like we spoke to earlier, increased performance in your investment portfolio there. And then also there was a $200,000 increase in system development fees that's recorded within that line item. So system development fees can certainly swing year to year just based on development activity in the town and when larger developments come online. And so that there was an increase again of about $200,000 in that. Capital contributions. This represents water and sewer assets that are donated to the town following development completion. That can vary again year to year based on development activity. Those were at 1.67 million this year, which is roughly a 48% increase over 23. And then lastly, you've got transfers to or from other funds. So again, this is a consolidated number, so this does not show transfers from the utility fund to utility capital project funds. So the only thing that we've got within the utility fund at a consolidated level this year is a $77,000 transfer from governmental activities, and that's essentially just some vehicles and equipment were transferred from the general fund or governmental activity side of things to the utility fund this year, brought those onto the balance sheet. So that's all that represents. That's a non-cash transfer. Overall, there's an increase in net position of about $5.8 million for fiscal 2024. Which is about a 17% increase over 2023. That's really all the comments that I had prepared, but again, certainly happy to take this time now to answer any questions about the audit process, or if there's anything within the financial statements, I'll do my best, or maybe kick it to Reagan and Tess if I can't remember. But happy to address any questions now.
Thank you, Mr. Cook. As our treasurer, Ann, do you have anything that you want to ask?
I just was going to ask Tess if she wanted to add anything. Are you at peace with, it sounds like the one issue was because we got a bill late from DRT. And I'm always astonished by how remarkably efficient and positive your department is. So is there anything else you'd like to add?
No, we just plan on working with James a little bit closer to make sure as we approach year end or even throughout the year, that things are handled in a timely manner.
Okay.
Yeah.
Thank you for all you do.
Thank you.
Yeah.
Brandon, do you have any questions or comments?
I do. On the executive summary, the charge out for administrative expenses, is there a rule of thumb on that?
It's a 2-page Excel document that takes into account general fund budget versus utility fund budget. People directly related with supervising, like James supervises utility staff, but he's in the general fund for payroll. And then it takes into account IT, the garage, like shared services and percentages, and assigns the charge out to the utility fund.
Okay.
Like our administrative department, they do human resources, they do hiring and benefit administration.
It's essentially a way to capture expenses that, because it's the business type function, if that utility were to stand on its own, it would have to have an HR department, it would have to have a finance office. So it's a way to capture a portion of those general fund operations that allow the utilities to operate.
So would this result in extra revenue in the general fund?
Yes, you'll see it.
You'll see it, yeah, because we actually pay water bill. Like this building has a meter on it and it pays for the water it uses each month. So there's
But
a
that's part of that.
It's not part of that. You'll actually see a line in the general fund that is a charge or a payment back over to the utility fund that represents the water that's being used on ball fields, or about the only thing we can't capture is anytime the fire department opens up a hydrant and has to put out a fire, you're going to use water. So that's part of your water loss calculation.
So we budget for 100% of that administrative fund in our general fund, and then move that money from the utility fund to the general fund, which would result in.
You'll see it in the budget document.
Yeah, I want to be careful based on what I'm hearing you ask. It's not that these numbers are necessarily going to balance out. They're two
No,
separate
I know,
calculations.
But 100% of James's salary is in general fund,
Yes,
and then we
and then there's a
reimburse
portion charged
of
back.
that. Right.
Yes.
You'll actually see within the general fund budgetary schedule at the back, you will see gross expenditures.
Yeah.
And then there's a negative amount
Okay.
within that department. So you can see, here's the total that we incurred for everything, like actual cost, and then here's how much is moving out to the utility fund.
Perfect. So,
Schedule 6 if you want to.
Schedule 6. Let me pull this up. So maybe I hate to be the first one to do this, but on page 8.
No, it's okay. I feel like that's how we're going to have to go through this.
So page 8 of not 8 of the PDF, but 8 of your page.
That works, okay. Oh, excuse me,
On of the audit, yeah.
yes, okay.
The government-wide financial analysis, the town. So the PDF page is not 8,
No, 8.
It's 26 on PDF.
Oh,
Is it?
yes. On PDF, it's 26.
but it's on your page numbers is 8 of the audit.
Okay, so what was the comment though?
So the question is, can you give me kind of an understanding of the unrestricted net position growth of 22%? So the
22%.
So the 23 was 35.9, 24 is 44.
Oh, okay, sorry, okay. In total, across government, okay, so this is going to be your full accrual financial statement. So this is the financial statements at the front. It's going to be based on exhibits 1 and 2, which includes capital assets, long-term debt. So as opposed to the budgetary basis statements, which would be like exhibits 3 and 4, where
Right.
you're looking, it's more of kind of a cash basis. So this represents, the unrestricted net position. It's really just a calculation of what's our total assets minus our liabilities. And then from that, we say, all right, of that, how much is restricted? The net investment in capital assets, that's the number you'll see,
Right.
86.2 million. That's, funds that are basically illiquid. You're not going to be able to utilize that. Obviously, it's assets to the town. And the 44 is what's left over after the remaining restrictions. The other restrictions could be things like, I believe this is actually the stabilization calculation for the general fund. But there could be other things from year to year, like if you had cash that was received for a debt financing and you hadn't spent it yet, those funds would be restricted for the purpose of that particular capital project. So 44, yes, it represents what's left. That's unrestricted in theory, but it's not necessarily cash, right, that's sitting there. There's a lot of things that factor into it.
And there's no way to draw a string from that 44 back to 0.
I'm not sure entirely what you're asking. I mean, so the
Like
cash,
I can't see what adds up to the 44.
right? It's just a calculation. It's taking assets and deferred outflows minus your liabilities and deferred inflows, and then you take out all the things that are restricted within that net position, and it's
Okay.
what's left over. It's essentially equity. If you were thinking about like a private company financial
Right.
statement.
Because the last statement on that page says that that balance represents, may be used to meet the town's ongoing obligations to citizens. So it kind of makes it sound like it's almost cash,
across all funds, right? So that includes
including enterprise
general
funds?
fund, your capital projects, your utility fund, everything.
Okay.
Yep.
Okay, that's what I was wanting. All right.
I'm sorry, I'm just going to ask a clarification question there, if you don't mind.
Go ahead.
Okay, so our unrestricted funds, that number, which is gone up from 35.9, that's rough rounding, the terrible rounding, but up to 44 million went up. But then in our budget, it shows that we drew down our fund balance.
This includes the utility fund and the general fund, though.
Okay, that might be the answer then. Okay.
Well, you can also look individually. So governmental activities would include your general fund and your capital project funds that are not utility related. And then you got business type activities, that's your utility fund and utility fund capital projects. So if you're really just trying to focus more on the general fund, you'd be looking at 15.9 million last year versus 20.6 million at 6/30/24. So there was an increase there, within that department, even though you may not see it in the general fund. Part of the reason for that, like we mentioned before, you had a $5 million transfer from the general fund to capital project funds. If you're just looking at the general fund, you'll see that that's a reduction in general fund balance, but it's increasing the other funds fund balance, which gets consolidated into this schedule. So it's kind of a net zero, between those funds. In theory, a lot of that will turn into capital assets in the future. It just depends on the timing on those capital projects. But yeah, it may be easier if you're trying to focus a little bit more on maybe just individual funds to take a look at the budgetary schedules at the back of the financial statements and our supplementary information. That'll give you more of a, hey, here's the budgeted amount in detail by line item. How much did this fund on a standalone basis take in revenues and other financing sources versus its expenditures?
So, sorry, I want to jump back on that 1 second. So I guess my first question was, what is the driver of the increase of the net position? And there's obviously more than one. Are there big items that are driving that net position up that much? And that's, we might not be able to answer that question, but off the top of your head, if do you recall anything that's driving that net position up that much?
You took out a $6.9 million loan for the Parkway that had not been spent by June 30th of 2024?
That happened before June 30th?
Yes.
The loan did?
Yes.
That explains a lot of it.
Unless I'm missing that.
If you're looking at Exhibit 3, budgetary
Right.
basis statements, yes. If you're looking at Figure 2, it won't. because that's really just a balance sheet
Right.
asset and a liability. There's no impact on your net
Right.
position from that by itself. But if you're looking at the budgetary basis statements, exhibits 3 and 4, you will see that. So it kind of depends on the basis that you're looking at. As far as particular drivers, I mean, you can see it was about $3.5 million within business type activities, and then a little more than that, obviously about $5 million, or a little less than 5 in governmental activities. So,
Can you explain the difference between business activities and governmental activities? Okay, business is utility funds. And the other one is called government activity, government?
yeah,
Okay.
it's essentially the general fund and everything else, all your other capital project funds, yep, outside of utility-related capital projects.
Okay. I'm sorry, did you want to go with, did you have anything else or not?
Unless you're done.
No.
Okay, go ahead.
I'm on page 11. I actually think you've answered this in the executive summary. So the total unassigned fund balance based on this is 18.6, right? That is the fund balance, and that's what your 45% is based on.
Yes, let's see, the total fund balance for the general fund, is that what you're referring to?
Yes, on page 11 at the bottom, it
So it's
says,
the total fund balance is 18.6. Your unassigned fund balance is at 11.2, and that 46% is based on your unassigned.
okay. And then on page 12, next page, the governmental fund balance there is 29, the very top of the page.
Yes, so that's governmental funds. If you're looking at Exhibit 3, it would include the general fund and then all of your other governmental funds, which includes all the capital projects. And that kind of gets to the point that Reagan made earlier about the municipal service district. You've got a large fund balance in that fund this year because cash came in. There's no offsetting
Right.
expenditure yet.
Right.
So that's driving a lot of that one. But yes, that's the general fund plus all those other funds. Yeah.
Okay. Not there. Well, maybe there. So on page 106, and I'm gonna jump around here between page 106 and page 26. This is the schedule of revenues and expenditures for water and sewer.
Yes.
Okay, so this is just for my own purpose to verify. So we have a $2.2 million more in actual revenue than planned in the budget.
Yes, and operating revenues, yes, they were 2.28 million over the final budget figure.
Okay,
Is that just in the water fund?
that's just water and sewer, yeah. Water and sewer sales, service charges, and operating revenue. So it's just water sales and service, and then there's the smaller amount is 85,000 of it is service charges, and makes up service charges and operating revenue?
I believe that's the late fees and turn reconnect fees.
And that's in service charges.
I believe so, yes.
So,
Just have a question there. Sorry if I can jump on.
uh,
To that point, I know the general, and this, I might not even be asking apples to apples. Yes, your expertise. You tell me if this is wrong. You told us like the 8%, we're doing the 45% for the general fund. In terms of the enterprise fund, the water sewer, I'm seeing here, that we've got from 9.7 to 12 point, there's some cushion there. Is there an appropriate cushion that in your enterprise fund you should be over for capital expenditures in the future or whatever else is prudent for that fund?
Yeah, and part of what we're looking at there, you'll recall, and I think James has been in at a retreat or two, we're looking at the capital projects, capital improvement plan, And while SDF is funding a certain portion of many of the projects that are upcoming, depending on the project and its 10-year horizon and the 25% discount and all sort, we've still got to have money to transfer to projects. And you may recall seeing sort of a curve that goes up and then it goes back down, and it's because we try to gather some dollars toward the transfer to moving on to some of the larger projects. One of those projects that's just getting underway now is what we call the North Pressure Zone, which is essentially a water tank up around the location of the Fire Station 2 and creating a pressure district in the northern part of town. So part of the reason you're seeing that increase, and that went into the calculation that was done back during budget recommendations to continue with the increases that we have, was in building up that particular reserve for purposes of transferring it then to the capital project fund as the project moves forward. So back to your original question, is there a standard metric? I'll defer to James. He may be able to provide something out of the APA or some other organization, but because every utility is in a little bit different stage relative to its age and its replacement and its necessary or unnecessary growth, if it happens to be in an area that needs that, I've not seen a particular standard that said, oh, definitely 25% or oh, definitely 50%, because every one of them is so variable on kind of where they are on their lifespan and where they need to be moving forward. And James, I don't know if you have anything to add to that.
I don't know that I could quote what the recommended minimum retained earnings are. I can tell you what our policy has been in years past, and that's to retain at least 50% of operational expenses. That does a number of things. It helps with fluctuating costs throughout the year, helps with future planning of capital projects like you're talking about. But I don't know, I can sit here and say, yes, the AWWA or the League of Municipalities recommends 50%, but that is what we have historically done.
So what is and I'm sorry, I'm just not jumping around as quickly as probably you can do this when asked. What is the revenue on the water fund, on that enterprise fund for last year?
Are you speaking to just the utility fund, or you want to include the capital projects for the utility fund as well?
I want just the utility fund.
That's what you would see at the top of Schedule 25, so on page 106.
Can you tell me the number so I don't have to scroll
Yeah,
100 pages ahead?
It's 11,976,527 for operating revenues.
Okay,
And then there's also some investment earnings of another 387,000.
okay. 11 million on the revenues. Actually, I'm just going to jump to the page, never mind. You'll don't have to wait for me.
It's page 124 of the PDF out of 185.
So the capital expenditures fund and the enterprise fund, capital expenditures doesn't fall under the enterprise fund? For water and sewer?
There's a separate schedule. You'll see right
Yeah.
after Schedule 25, we've got Schedule 26, which includes the capital projects for the utility fund. If you're looking at
Okay.
Exhibit 6 at the front of the financials, it consolidates all that information, but we have it broken out separately in the back in detail so you can see what's utility fund versus the capital projects.
Okay.
And capital expenditures may, if they're not being done within a capital project fund. So I want to be careful
Right.
about that
So I
differentiation.
think what I heard is we raised water rates to pay for a capital expense.
Well,
In the north.
to cover your increasing operational expenses, but yes, the next big project is to create dollars to be able to transfer over to that capital project fund toward that project and others that are on your CIP, but that's sort of the next one in the line.
What are the estimated prices on those capital improvement projects? I mean, we've got in the enterprise fund, there's an unrestricted fund balance of 23.35 million, and we collected an additional 2.2 million just last year. It seems like it's a lot of money. Like we're loading up our enterprise
It
funds.
does, except the most recent figure on that North Pressure Zone, James, help me, is 7 point.
I don't have that immediately in front of me. I can tell you when I did the rate analysis last year, between we needed another roughly $5.5 million on top of what we had already moved into the fund.
On top of the 20-some million?
No, just the North Pressure Zone Fund.
The 20-something that is inclusive of all of your capital projects on the waters, including your water plant capital projects, which are another multiple $1 million. So
But the unrestricted fund balance is 23.35 million in the enterprise fund. Correct?
Correct.
Yeah.
In totality, yes. Yep.
Okay, thank you.
Are these questions that are relevant to the audit, or are these questions that are relevant to our finance?
They're both.
When would you like to ask them if not during the audit?
I think the audit is checking whether or not things match and whether or not we've had any issues with,
Why do you think we should increase our water? Why did we increase our water fees?
I think that's something to talk about at the finance meeting. I don't think that the audit is involved in that.
But we got a number, and now we're looking at audited numbers that I don't think that we needed to increase our water. And I don't know when else we would see it except for during the audit, unless you have a recommended time that you'd like to talk about it.
The budget meeting in April.
Well, part of this also is I don't
Numbers.
understand necessarily what I'm looking at, so I'm trying to clarify.
Okay.
And that's why I'm kind of henpecking through here to understand what I'm looking at.
Am I confused? Do we see the unrestricted fund balance in either our general fund or our enterprise fund during the audit in April?
you
I don't
see the
remember seeing
retained
it
earnings
either.
on hand, yes.
Retained earnings is different from unrestricted fund balance. The retained earnings is the budget. I'm looking at a
You
balance
do
sheet
not
number.
see it as a consolidated figure that 22 represents. You do see it across the various places it has been allocated for future projects. I think that's the right way to say that. And
So,
correct me if I'm wrong, but
so we have the fund balance, unrestricted fund balance in the water alone, the 23.35 million, we've accounted for in capital projects.
Some of it's there,
Okay. Some of it's there, it's not the same as it's all there.
not all in the utility fund to be spent on the day-to-day operations.
Okay, which I would assume it wouldn't be. I mean, I don't expect to spend every dollar that we have come in, nor do I expect to spend all of the fund balance that sits out there. I just think there's a reasonable number, and I'm not sure that the numbers are what I would consider reasonable. And so that's why I'm asking, if that clarifies, Ann.
I'll just add that if you're wanting to look at just the capital projects, you can take a look at the budget variances to date. And so you've got your budgeted revenues versus your actual revenues and expenditures, other financing sources, et cetera. And right now, in theory, those capital projects, they all balance. You've got a certain amount of revenue budgeted to offset the expenditures you're going to incur. And right now, you're at a positive variance of 8.6 million. So far, sources have come in for those projects. You're 8.6 million higher than the expenditures you've incurred related to them. So exclusive of other future projects you may be adding in 25, there's 8.6 million in that number that's going to be used, I guess, on these projects in the future.
Referring to Schedule 26.
Yeah, you'll see this, there's a total to date and then a variance column.
Schedule 26 starts on page 110.
Bottom right of page 10, that 8.6 million, that's your, basically the cash that's come in excess of the expenditures that have gone out.
Okay. Okay, thank you.
I have one more question. Page 26. Exhibit 5. I guess I'm trying to wrap my head around the delta between the actual versus the budget. And maybe that's not a question for the auditor, but
Are you talking revenues or expenditures?
really both, but starting with revenues.
Did you say in page 25?
20, mine's page 26,
Okay,
Exhibit 5.
okay,
44 of the PDF.
thank you.
So for example, we planned 22.8 million in the budget for revenue. We recognize 27.5. Then on the flip side, expenditures, we planned 27 million in expenditures, and which doesn't actually I don't know why we'd budget for 27 million and only 22 million in revenue, but anyway, the actual was 24 million, so there's like $7.2 million in delta between actual versus plan. And I don't know, I guess this is the result of the audit. I just want to maybe take a more harder look at that next March.
So, and obviously you're looking at the bottom line figure, 27 and 22. So in the case of your ad valorem taxes, you'll recall that we budget at a 98.5%
Collection rate.
collection rate. Thank you. And I think we just increased that with this last budget. I don't remember if we went to 99 or if we went to 98.75. I'd have to go back and look. But so the difference between the 12.4 and the 12.8 in part is because the collection rate was clearly better than 98.5. Instead, it was 99.87, I think was the figure. On your other taxes and, not on the other, on the unrestricted intergovernmental, a lot of that is the sales tax, which we have gotten, as you'll recall, a lot more aggressive on estimating out in the current budget year. But those are your two large ones. The sales and services and permits and fees, those are estimates at best, and a lot of that just depends on the amount of building activity, and not only as simple as maybe the number of home permits that get pulled, but if you get some of these larger scale Target or some of the medical complexes, that can kind of skew a year-over-year type figure. We've had a pretty consistent run of at least having one or two of those pulled. But we all see sort of those areas starting to build out to where some point in the near future, a year is going to come that maybe that large permit does not get pulled.
Right.
But those are some of your larger variances in that figure and how it sort of ends up that way.
What about investment earnings?
And again, that went from almost zero to, I mean, one of the rare benefits of inflation and interest rates going up is that if you had money in the bank, it might have done a whole lot better than it has for the last decade.
Right.
When I first joined the council and it swung the opposite direction, and I found it
Yeah.
distressing. But it's because we really have very limited options on how we invest it, and CDs returned such a high percentage, so we saw the upside.
March, April.
Right.
Of 23.
Yeah.
Right.
So it was very conservative.
You'll be pleased to know I'm done.
So I will say on that same page, on page 26, so our revenues are, I mean, this is off the top of my head numbers, 20% higher than what we budgeted. So I feel like we're, from the budgeting standpoint, from maybe to Ann's point that we talked about this in April, we underestimated by 20% on our revenue, which seems like a lot. And this is, I know, looking back a year, and I think we tried to do better this year. But we also overestimated our expenses significantly.
Well, I want to be careful with that because I always make the statement during every budget hearing, and I frame it as worst case scenario.
Sure.
Not that it's really worse, but I mean, we budget as if every authorized position is full for 12 months, unless we've had the discussion of we have a new position and we won't fill it till January. But we budget it as if every position is full for 12 months, that every project will get completed and or every purchase made before June 30th, kind of going back to the invoice. So oftentimes there are things that end up carrying over into the following budget year.
Yeah.
I think that maybe a good plan next year would be to do maybe a mini rebaseline in March of especially these big revenue and expenditure items, so we know, especially if we're talking about, if someone's suggesting or a council member is suggesting that we raise property taxes, that we have a better idea of what revenue and expenditures are actual versus plan before we even talk about budget for the next year. Because that, you know, that we talked about that. So.
And one of the things to also keep in mind that this allows to work is oftentimes when we adopt that budget in June, there's a use of fund balance that can be upwards of $3, $5, $8, $9 million.
Temporarily.
That is possible because of this approach, that disappears as you start to tighten that window, which is already going to be a little bit of a challenge with some of the sales tax things that we're both in how we're approaching the budgeting of them and now what we maybe are starting to see. We'll see how that plays out over the next couple of months.
I think I'd just like to see a tighter budget. It's a $7 million swing between estimated and actual feels like an awful lot for a budget our size. I don't even know percentage-wise what that is, but it just feels like a lot. It feels like we're creating our buffer on either side so broad that we have a lot of swerving room in the middle as far as where we can go, how much we can spend and still be under budget, and how much we can bring in and still have more than we expected on revenue. I think we're getting there, but I'd like to see this number continue to decrease, the variance decrease. Just, I mean, it's other people's money that we're budgeting every year, and I don't want to take any more of other people's money than we absolutely need. And I would like to show that we are being fiscally responsible with every dollar that we bring in, as opposed to, and I know we need to be conservative on our estimates. I just don't want to be so conservative that we end up bringing more money in of someone else's money that we don't have to. That's all.
I mean, you see other municipalities, is what we're looking at pretty straightforward standard, or are you like, yeah, you're more conservative than you need to
In
be,
terms
but
of
it's
the
okay?
budget variances?
Yeah.
Units do tend, towns, cities, counties, et cetera, units do tend to budget conservatively, and a lot of that, especially on the expenditure side, and a lot of that has to do with the fact that everything has to be pre-audited. You can't spend any money you haven't budgeted for, right? So you don't want to create this massive administrative burden for yourself where you budget so tight, you got to go back to council every time you want to spend another dollar.
Yeah.
On the flip side, yeah, if you over budget, yeah, there could be concerns that, hey, you're not paying as close attention. But I wouldn't say it's uncommon. I think that, I've certainly seen others that, are conservative on both sides of it. And so it's just sort of, I think like you guys have been getting at, it's more of a budget decision and discussion maybe during budget season, but I wouldn't say it's uncommon.
And not an argument against what you stated whatsoever, because I philosophically agree. But as a reminder, what Chad said earlier, that 50% is sort of the standard across the board too. And that number is very much representative of this discussion of how conservatively or not one budget's revenues versus the expense side of things. So if nothing else, we're kind of in that realm of what's considered best practices or common practices, if not best.
On that, I think we should probably change our policy to reflect what we have versus have this 25% and have
I was like, yeah,
45%.
it's a funny policy to have 25% if our actual goal is 46%. I feel like if the speed limit's 25 so that people can go 46, we're already setting our expectations that it's
Well,
not a
I will
policy
say
we're
that
gonna
the
follow.
difference being you've treated the 25% as a true reserve, emergency fund, rainy day fund, whatever terminology you'd like to use. It's above that 25% then that we get into appropriating fund balance, what we have always called available or unassigned fund balance. So if for instance, you were to suddenly set it at 45, that means that for every operational expense we put in that budget, we're going to set aside another 45% on top of it, which is going to make things exceptionally difficult. Because there are years in particular, you'll note in years where you are actually decreasing the fund balance like we did in this past year, it's because you made decisions like, let's pay cash for some fire trucks. You paid cash that was between that 25 and what was 52% the year before and utilized it. By setting your automatic reserve or your set aside above that 25%, say to 45%, you don't have that cash on hand to have those discussions and make those decisions through the year to purchase a fire truck or something else.
What you said makes complete sense. The problem with it, though, if you read the budget and it says 25% policy and you have 45% or 56% policy continually, then to the taxpayer, it's like, well, why is your policy 25% and you run 30 to 35% over that? So,
And the only response I would have to that, take it or leave it, is that it's 25% based upon the projections you are making for revenues and expenses at the time of the budget. It only turns into 45% once the audited figures come back and it's determined what got spent before June the 30th and what actually came in.
Right. I think we should probably at least look at the statement of 25% to reflect kind of what you said.
What it
And maybe-
represents.
Yes.
Okay.
Yes. I have one final question, I'm sorry. On this same page 26, Exhibit 5, in this schedule of revenues versus expenditures, the administrative payout from the utility fund, is that represented here? Like, does it increase,
Yes, it's
reduce?
it's effectively a reduction to the general government expenditure, so that 8.1 million that you see, 8.15, that is reduced by the 1.3 from the utility fund. So if you looked at the Schedule 6 at the back, you would see a gross number that was $1.3 million higher,
Yeah,
that in total, and then you'd back that out, and you get to the 8.1 at the front, in Exhibit 5.
okay.
So yes, it's not a revenue, it's a reduction to your expenditure, yeah.
It would not be a, okay.
Yeah, I guess said another way, you spent 9.4 million on general government costs, but 1.3 is recorded in the utility fund, so
I
we're
got
just
you.
showing 8.1 in the general. Yep.
Bill, Deborah, do you have questions?
No, a couple of them came up as we were talking, but we had a very engaging discussion. So I remember when James mentioned that a 50% window, or not window, but just a kind of having a 50% extra amount for any utility issues.
So it's a target of minimum retained earnings that's estimated at 50% of projected expenses.
I think I was thinking, do we ever get to that threshold of 50? Or we always fall way below that in terms of,
Well, actually, we generally stay above that.
oh, say above 50, really?
Yes.
So we're collecting more than 50% of our water expenses in order to fund a balance to pay for capital outlays in the future. Is that correct?
Yes, I think you said that.
Okay, okay. Okay, and then the last question before I wrap this up, unless you'll have anything else. Okay. So every year we do our budget and we have, as Reagan pointed out, we can draw down or add to our fund balance. What is the fund balance, actually? Because when we look at our budget, we see a fund balance of a reserve at about 25%. No, not that. We have our 25% fund reserve, and then we have an additional something like 400,000 that we call
We usually try to
Available
target 400 to
balance.
450 as available fund
Available
balance. And
balance.
again, that's based upon the figures we have in front of us for that budget, with recognition that it's hopefully almost always going to go up following this.
Okay. And then the number in here is something like 44 million on available fund balance. I'm just trying to make sure, and I know that's not all,
You're talking about
Quote, unquote,
the
available.
unrestricted net position.
that's it, thank you.
We're talking about the cash part,
This is
not the-
probably the only time of year you see that number. So
Okay.
that's a full accrual number.
Yeah.
You're operating throughout the year on the budgetary basis, so you're seeing fund balance. This is the only time you're probably gonna get that.
Okay,
So I doubt there's anything you're seeing during the budget cycle that you could really compare apples to apples with that figure.
so it's,
assets, I mean, that's your hard assets and things. That's only if you started
Well,
selling off. And
the hard assets are restricted. I thought that was the number above that was restricted,
Yes, your net investment in capital assets,
is like
that's
86
your capital
million.
assets minus any capital asset related debt.
Okay, that's our largest holding are our investment capital assets, buildings, pipes, plants, things that we cannot touch.
If I may, I think our fund balance is 29 million combined, general fund balance and utility fund balance, or not utility fund balance. There were some other ones in
Well,
the
it's
29
23
million.
for, like on the
Right,
water.
that's right. 29 million is on page 12, and then 18.6 is the general fund balance, and of that 18.6, 11.2 is unassigned. And the delta between 18.6 and 11.2, I believe, is those funds that pay for sidewalks and, street maintenance and those funds is that where that money comes from? The delta between 18.6 and 11.2?
The largest delta is the balance that's assigned for subsequent expenditures. So in your fiscal 2025 budget, you budgeted for expenditures that were 4.1 million in excess of your revenues.
Right.
So we're saying 4.1 of the 18.6 is going to be used in fiscal 2025.
Right.
Assuming everything comes in exactly with the budget. Yeah, it's obviously not going to be the case. You're not going to come in right on budget, but that's the biggest portion that's been taken out of the 18.6. And then you've also got this restriction, a stabilization by state statute calculation, which is a little convoluted, but it's a calculation of a lot of the receivables and liabilities that you have on hand at June 30th, 2024.
Right.
Making sure you have those funds set aside to pay what you've got outstanding at the end of the year.
So when we talk about drawing money out of our fund balance, we're talking about the page 22, under fund balance, the unassigned fund balance, like the 11 million, 11.2.
Well, in theory, anything that you're pulling out in 25 would come from the 4.1 million.
The assigned subsequent years expenditures.
Right. That represents how much you plan to draw down fund balance in fiscal 25.
And just to verify, that was based upon the budget adopted June. So you've already taken
just
for
approved.
demolitions and some other things along the way.
Okay. So I'm just trying to get to the root of,
Fund balance.
yeah, the fund balance. It seems like a really silly question to ask over and over. I'm just trying to make sure that I know.
It's actually.
There's a lot of different numbers for fund balance. So when we draw down from fund balance next year, when we're working on our budget, assuming everything goes as planned for this year, which it won't, we know it won't, never does, but that's okay. We will be, if needed, we'll be touching the $11.2 million unassigned fund balance that sits in an account somewhere based on page 22 of this balance sheet.
Minus whatever amendments you've made throughout the year. But yes, yeah, that's the new available that you're sort of looking at moving forward. And that's what we end up looking at. You'll recall when we sit down in April, there's a column on a lot of those that talk about expected by June 30th. And we always caveat that, again, this is what we expect, but if something doesn't come in, project doesn't finish, whatever. But those are the adjustments we are making. And in this case, 11 million plus whatever adjustments between now and then would be the amount we would be looking at to potentially, you'll see a sheet on the top of your balance sheet that talks about, I think it says carry forward, or it's one of the first numbers at the top of that. But if you look back at past budget packets, you'll see that number on there. And that's basically the new fund balance that has come out of the audited financials that we work with every year, and then putting together the budget and determining how much to appropriate of fund balance in order to balance that budget on the bottom line.
Okay.
I'm actually more confused now. So,
Forget everything I just said.
so let me just, so,
Speaking my language and it's a different one.
so total fund balance, general fund, 18.6. Unassigned, 11.2. What's the difference between 18 and 11? What's that 7 million? What does that amount reflect?
That would be all the things up above it on that page,
Is
right?
the 7 the inclusive of the 25% reserve, the restricted?
Yeah, it would be.
There's 3 million.
Yeah, so the 11 is,
Well, no, that's actually, we've got a separate disclosure that talks about where you are in terms of that policy.
Right.
Because you're in excess of that. That's part of the 11. Like your 11 is above your 25%, but it's the 4.1 and the 3 million that you're seeing within that fund balance section. That's the main delta driver.
What is that,
So
though? What page are you on?
So on page 22, so you're looking at the 11.2 million. The very next number right above that, 4.1 million. That's the amount that you're planning to use in fiscal 25, according to the budget as of June 30th, 24. Yeah.
So you've already reserved the unassigned fund balance that has been appropriated for fiscal year '25?
Right.
Okay.
Yeah, so the stabilization is in that number too then, in the,
Well, the stabilization's a separate line, but yes, it's part of the difference between the 11 and the 18. Yep.
right. And then on that next page, it says, going back to this other number that we saw, like the mayor said, we have a lot of words that say fund balance, fund balance, fund balance. And it's hard to get an idea of what fund balance really is. And then it says, governmental funds of the town reported a combined fund balance of 29 million, and that is general fund balance and what else?
Yeah, so if you were looking at Exhibit 3, yeah, you'll see that that's the total coming from the bottom right, the 29,085,000. And if you look at the columns within this exhibit, you've got the general fund, you've got your municipal service district fund. So those are the two funds that we had to call major this year.
We've already talked about that.
Yep. And then there's non-major, and those are summarized in another exhibit at the back if you wanted to look at
Yep.
all the different
No,
ones
we're
that roll
good.
up into it.
Okay, so our deadline for this audit to be adopted is December 1st, so we need to take action to adopt it at this meeting. Is that what staff is asking?
Yes.
Okay. And then we have 30, 60 days, something to sign that letter, which we'll get from staff. And then we'll sign saying that we know our water plant is aging. Okay, we're all getting older, our water plant included. Okay, I will tell you what I told our auditor, Mr. Cook, before this. I feel like in the scheme of things, I feel like I have a really good understanding of finance compared to a lot of people. And it might still take me the next 3 years of being mayor to really feel like I have my head wrapped around this. So I really appreciate your all's patience and your time put into it and answering questions to make sure that we're doing our job, you know, responsibly using our taxpayers' money in a way that best benefits our taxpayers. So I appreciate your all's time. If there is a motion, I will hear that now.
I appreciate the discussion. It was very helpful. I think we're going to do a lot of good things with it, but for purposes of today and for what you've presented to us, I'll make a motion to approve the fiscal year '24 audit.
I second that.
All in favor, vote by saying aye. Aye. Any opposed? Motion carries. Thank you so much.
Thank you.
Okay, action item B, consider reappointing Catherine Shermer. Am I saying her name right?
Yes,
correctly?
Shermer.
Okay, to the Appearance Commission, term expires the end of 2027. Do we have any information on Ms. Shermer, or would anyone like to?
Is she here? No.
Jessica, did you have anything? She's a current member of the Appearance Commission, is simply asking for reappointment. Very active member, attends meetings.
Perfect.
And also a master gardener, which
Perfect.
helps with.
That sounds great. I'll make a motion that we approve her reappointment to the Appearance Commission.
Second.
All in favor, vote by saying aye. Aye. Thank you. Sometimes there's an application or something in those packets, but maybe when they're reappointed, they just verbally state they want to be? Okay. Okay. All right, Mr. Dean, thank you for your patience. We are now getting to reviewing the
You learn a
skate
lot
park
about finance,
rules.
audits.
Might we take a quick break before we do that?
Gladly, okay. We don't have a clock in here. It is 4:24. Let's come back at 4:35. All right, I thought I gave us long enough of a break and it still took too long. Not in a bad way. All good. Okay, Mr. Dean, I'm calling us back to order. We're going to get back to our review of the skate park rules. As an action item, we don't usually have public comment, but because your organization has been so highly involved in the fundraising and the planning of this, would you mind also coming up to the microphone? Just join Jessica at the table. And then Jessica, I'll just ask you to give an overview of what you'll have done in the last 4 weeks and what your recommendation is.
Good afternoon.
Good afternoon.
So at the October 22nd work session, staff presented the state mandated rules for the skate park, which council did adopt. We did have a fairly lengthy and discussion about bikes because our recommendation was to prohibit them. And some of the discussion really kind of centered on, let's kind of see what the future looks like. Let's keep our options open. I don't know that any of us were, outright against them if we could find a safe way to do it that our insurance company would be comfortable with. Mr. Dean has since come back, and he was at your council meeting last week and asked if we would reconsider our stance on not allowing bikes when we open. And we currently have a tentative ribbon cutting scheduled for December the 13th. So with that in mind, staff got together and we looked at a few more options that might be palatable for when we open. I do want to say our Parks and Rec director, Greg Thompson, he wasn't able to be here this afternoon because of a previous commitment, but he and I have communicated on all of these. So he has been involved in what I'm going to be recommending to you. Essentially, there's 3 options you could do today. One is just to do nothing, to maintain the status quo, open the park with the rules that you adopted last month that prohibit bikes, and then we could take a look after it opens and we have a better understanding of everything. Alternatively, we could revise the rules to allow bikes at certain times and under specific conditions. This is the path that Greg and I would recommend if you are wanting to take some action today. Our suggestions would be that we segregate the use of, we're just going to call them pedal-powered equipment, essentially bikes, tricycles, those types of things, from the other types of equipment that are skateboards, inline skates, roller skates, scooters. And what you're going to see, I included some information in the memo that was in your packet really on why that's important. And one of the key elements is that the pedal-powered equipment versus all the other equipment, they just have different riding styles and they even have different trajectories. And so when you're putting them all in a confined area, you just have this opportunity for collision because they're just not going in the same direction and the same patterns. When you add in the fact that the bikes are heavy, they have handlebars, you're just really kind of asking for the potential for severe injuries. And so if you are interested in allowing bikes, we would really ask that we continue to keep them segregated, and then Greg would determine the posted days or times that bikes would be allowed. We did look at all of the public skate parks that we could identify in North Carolina. And while the majority of them do allow commingling of bikes and skateboards, it is not uncommon to have segregation. We found that there's 8 of them that just do not allow bikes at all, as we've currently adopted. And then we found a small group that they do have some hours that segregate the days and the hours. And usually what they do is they'll have, say, maybe one morning, maybe one weekday morning, and then one weekend afternoon. And so you're kind of getting about 8 hours of bike riding in a week. And that seemed to be fairly common. So we've written some rules that kind of mirror that, if that's what you're interested in. And we would also ask, which I know Mr. Dean brought up when he spoke last week, that the metal bike pegs would be prohibited. And so if bikes do have pegs, they're either plastic pegs or they have peg sleeves. And this is not only for rider safety, but it's also for the long-term maintenance of our park. And then the third option would be that you just allow bikes at any time the park is open. So essentially you're allowing this co-mingling. We don't recommend that option.
And that option was insurance-wise about double the expense, correct?
That's what we have been informed, yes. We were expecting the insurance company to come out yesterday, and they were unable to keep that appointment. So I think it's going to be another week or two before they can get out. So we still don't have a final confirmation, but they did tell us expect it to double.
And we don't have a number on shared but segregated. Like,
No.
The shared but segregated does not change the number is what they have told us. So it would be just like, it's a rate, and sometimes it's bikes, sometimes it's other, but
Okay.
there's not. And they had provided us upfront prior to construction figures of $54.99 annually for the segregated or skateboard only, $10,998 commingled, but that is subject to them coming out and actually look at what got constructed. And a lot of, in speaking with both Greg and Jessica, a lot of the recommendation to at least begin with a process of let's set some hours and see what the demand is less about the $5,000 difference, but more about, it is a small skate park. I think Jessica provided in her memo of those that they were able to take a look at. You'll note that a lot of them that don't allow the bikes and or don't allow the commingling are of a, let's say, under 10, 12,000 square foot footprint, similar to ours. Many of the ones that do allow it are much larger, where I guess I'll call it natural segregation might take place, where the bikes are kind of over on this side and skateboarders over here, and we don't really have that set up and availability here. So thus the reason, the recommendation is as much about concern for safety as it is $5,000 difference in insurance or whatever that ultimately ends up being.
And the question I had with the segregation, similar to you mentioned, we're going to post signs about helmets and pads, but we're not having a staff member sit out there and enforce that and write tickets. Is there an enforceability mandate to maintain everything? Or is it just we post the hours, here's bikes, here's skateboards, y'all figure it out? I mean, there's no expectation that we sit out there and be like, oh, you're a skateboarder, it's 3 to 5, you can't be out here. We're not going to be expected to do that, are we?
That is not our understanding from our insurance carrier. In terms of the state law, in terms of releasing us from liability, that is not the expectation either. The requirement is that we post rules. We actually have to, on the signs, say we will issue tickets, just so you know. What is common in our parks and recreation enforcement is that we tend to ban people from facilities if they just outright don't follow our rules. And that comes after warnings and things like that. But that tends to be more effective than just, handing out a ticket, especially when you're talking about children involved. So
Discussion, like the more bike prone folks, I mean, are they a little bit understanding of what we're trying to do? And you think if there was set times, at least be somewhat understanding and know when they could go and not go?
Well, I think so. In formulating what I gave to you guys last week, I spoke with our members who are bikers or who have children that bike or what have you, and asked them for options. And of course, commingling, what I brought up about build a new park for us, and that kind of thing was mentioned as well. But the segregation was a terrible word, obviously, but it's but it is a solution to the means to a solution, and that they, I think, are already used to from other parks, like Ms. Ross said. So I think the general consensus is that they will take what they can get as far as that's concerned.
And the language was crafted the way in which Jessica crafted it, with the intent of, again, being able to be flexible, kind of mirror what sort of demand is out there. I know she mentioned a weekend or a weekday morning and a weekend afternoon or evening. If we find there's a huge demand, that can always be 3 days or 4 days or certain hours. But rather than having to come back and have this conversation again and again, or always have a consent agenda item to change hours in front of the council, we wanted to set up a scenario where the Parks and Rec Department could react to sort of the demand and what's taking place. And Mr. Dean may very well be a part of that as groups form and different programming begins at the skate park. But it's really an opportunity to allow for it, but also sort of test it a little bit and see really how we can generate the most use of this park and the investment that's been made in it.
I guess my question originally would be, is the 8 hours, or are the 8 hours sufficient? I mean, is that a fair amount of time for the bikers?
I think my understanding was that our Parks and Recreation staff would actually have the flexibility to adjust that.
Yeah.
Okay.
Right, I heard you, yeah.
It's too much, okay, but if it turns out that there's a large regular core group and there needs to be 12 hours or a different day or something, the way it is written out allows for the flexibility for that determination to be made without having to come back and actually change the rules
Right.
themselves per ordinance or resolution.
Consistent with how we run all of our parks and recreation facilities is any of those changes, Greg and his team handle. And he and I have even had some conversations. We know with the Skaters for More skate jams, we've had a lot of young kids who have been out there with their little tricycles and their little skateboards. And so I think what we're actually going to try out too is having separate hour or so for young kids. And so if you're on actually a tricycle or a kid's bike, like this is your time. That's not for teens and adults and same with the skateboarders, because ultimately, and what I've told Mr. Dean is our goal is to open a fun, safe skate park. And that cannot happen if we're having all kinds of collisions. And that happens if you've got bikes and skateboards together, but it also happens if you've got inexperienced little tricyclists out there with adults. And so we want it to be open to everybody and everybody to have fun. And so the way we've crafted these rules will give Greg and I the flexibility to test some of these things out. And maybe we'll keep adding to it if there's a big demand, or if something just doesn't work, then we'll adjust on the fly, So our goal is certainly to make it open and realistic, so.
Mr. Dean, you mentioned in one of your options having etiquette taught by volunteers. That was for the all allowed at all times. If we have a restricted by hour day, do you think that you could still get volunteers together to teach skate park etiquette?
Yes.
Okay, I think that would be wonderful.
I think it's necessary, and I had even talked to Mr. Tom or Greg about putting a sign up, because a lot of in addition to the rules, hey, this is how you do it, skate park etiquette.
Okay, great.
And that also goes to, and it's a learned community thing, but it also goes to the older kids, like you were talking about, kind of giving way to some of the younger kids. But the younger kids are the ones that really need to learn. Take your turn, watch out for for bigger kids in there going, hold off, and that kind of thing. But it is something that can be taught.
I had one question. So it sounds like from discussion, that this has got momentum, and it's at a minimum looking potentially for this option 2. However, I can't help but notice I do value our town attorney's opinion, and there was a note in here that he did not suggest any changes. So can you elaborate on that?
I agree with the staff recommendation. It's commingling that
Okay.
I'm adamant.
So if we settle on this more door number 2, your position here.
You're okay if
softens.
groups are sequestered? Okay. It's a new word, giving it to you. Yeah, there you go.
All right, so
To you is, I wanted, since this is the final meeting that we're going to have, unless you call another meeting before December 13th, this would be the final opportunity to adjust the rules and for us to get signs printed, which is a requirement before the park opens. So I went ahead and just put together an ordinance with the changes based on what I've just described to you. What you'll see is the first attachment, which looks clean, is just how it would appear in the code if you adopted the changes that I've suggested today. And then the back copy is just a tracked changes version that shows the additions and the strike throughs and that type of thing to accomplish the clean version. So really all it is adding clarification on bikes and the fact that they're segregated in the pegs. And then I just moved a few other rules around. It just kind of made a little more sense if we were going to add in bikes.
Keeping us moving along, I would like to
I have a couple questions.
use my authority to make a motion.
I have a couple questions.
That's perfect. I'm going to make a motion. If there's a second, then we'll talk before we vote. Sound good?
No, I'd like to ask my questions before we make a motion.
Okay, well, that's how Robert's rules work, and that's how okay. It's hard to run a meeting when we don't abide by any regulations. So I would like to make a motion that we approve as presented ordinance number blank with the updated changes per staff's recommendation. And then before you print signs, I'd also like to discuss some of the stuff on the Skate Smart Shred Hard. Is there a second who is interested in approving this as presented? Okay, now there can be further discussion before we vote. What would you like to ask?
So my question is for you, Mr. Parsons. When you said that the insurance would remain the same, if people are sequestered, is that a $54.99 the same or a
Yes.
$10,000?
Yeah, it's the 54.
That's the lower amount.
And again, that was the pre-construction estimate. The final number may be different after they come out and do the inspection, but it's, if you just look at it as base and double, it's the base is what they have told
Okay.
us.
And
I can confirm that after last month's meeting.
I'm for the sequestering or segregation. I think that's a good solution. I'm also really interested in the younger people who want to try out the park, having a moment when they can do that. That'd be great. My other question, though, is probably for our town attorney, which, thank you, Mr. Pate, for asking my original question, because I saw in the review that he had indicated no change. Are you comfortable with G of proposed 99.03 G, where it's just failure equals possible expulsion? Or do we want to muscle that with a possible fine? And who then is in charge of the expulsion? Who has the authority to do that? How do we enable a punitive nature legally? And I realize we're dealing with minors too, so I wanted to talk to you about how to address that.
That provision was my suggestion, because that's the enforcement mechanism we frequently use in other parks and recreation facilities.
Right.
And I think this will come down to the Parks and Rec staff enforcing it.
And I believe, if I recall correctly, Mac, and we were looking at it for other reasons, that there's actually already language in the Code of Ordinances that designates that Parks and Recreation Director to have exactly that authority. So this is
Okay.
like any other park where breaking the rules may result in expulsion for a period of time. This just simply falls under the other parks and facilities that we have.
Okay, I just wanted to make sure that if we were going to approve a regulation, that there was actually some authority, somebody had some authority
Yes.
to actually follow through with an expulsion if that was necessary.
There is a little bit of a nuance there. You said maybe, and this says shall, so whatever that means.
Any other discussion? Or questions?
Like you want to have a discussion on the sign, but we can do that off after this.
One-on-one, either with Jessica or Greg. Who's printing the signs?
I put the signs together, so we need to do that sooner rather than later so they can get printed.
That's fine. I understand the second one was at our attorney McCarley's recommendation on the legal wording. I'm 100% fine with all that.
That's the
I just-
signature on risk.
Southern Pines Skate
Yes,
Park
pretty much.
rules. The page that just says the
Oh.
rules at the top, and
You're talking about this sign, right?
one after that is Max.
Oh,
Yeah, both signs would go up.
Yeah.
One is the one that has to go up to make the insurers happy and to keep our limited
Yeah, no, I'm-
immunity. The other one was an intent to actually have it be read
Yeah.
by the
No,
users.
In the interest of it being read, I think eliminating any additional language, fewer words get read more often.
So do you really think the waiver included in Southern Pines Skate Park rules, number 5, would hold up in court as far as the liability?
I believe that's an excerpt from the general statute that set up the limited immunity clause, but I'll let Mac verify that.
Is that on the second sign?
Yes.
The answer is yes. That, there are no points for creativity in this game, so all of that language comes straight out of the statutes.
And at that point, if someone did have an injury and filed a claim, What's the point of having insurance at all? Just, I don't want, I'm not suggesting we don't have insurance, but I'm interested in what part insurance plays.
The insurance that we get from the league also covers defense cost. And the first thing we would do in that lawsuit would be file a motion to dismiss based on the liability protection given by the statute and us having complied with all the rules.
And the fact that you're dealing with minors who don't have the ability to waive that liability, you concerned about that at all?
It's still a hazardous activity, and if they're a minor, they were there with mom and dad's permission, or at least the court will think so.
Okay. I hope you're right.
Me too.
On the very first, when this is the only thing I have optically, and I sat here for a good 2 or 3 minutes. No gear equals no skating. It makes sense to me now. I thought that it was 2 different lines. No gear equals helmets, knee pads, elbow, and then no skating. We'll give you a ticket for this. And I'm like, man, that doesn't make any sense. No skating. We'll give you a ticket if you skate. And then I was like, oh no, it's no gear,
I gotcha.
no skating. So that's just something. That's it.
Just a point of order, we're getting away from it. There's a motion and a second. So do we need to act on the motion before we get too far?
No, the motion can stand as long as
As
we're
long as we want
discussing.
it to?
Yeah, unless someone makes a motion, a second motion or an amendment, yeah. We're okay making a motion to approve this and still edit the sign.
Yeah.
They're independent.
All right, well, why don't we go ahead and follow up on the motion? Unless there's any other specific discussion about this ordinance. Or the recommendation that bikes,
It's just the vote then, right?
was there, so,
You just call the question.
I don't need to call the question myself, I'm the one talking.
No, just say.
Okay.
We've all had an opportunity
Okay.
to speak if you want us to vote.
Yes. So just all in favor, vote by saying aye.
Aye.
Aye. Any opposed? Okay, that motion carries. Thank you, Mr. Dean. I do want to quickly mention that the December 13th ribbon cutting is different than what was listed on our agenda.
Thank you.
Yeah, yep, so it
Yeah,
is
and
the
I-
13th, correct?
You all have an email to that effect, and unless something changed leading in the hour leading up, I don't think there's been a time set yet. But previously, I had a save the afternoon of December 11th, and that changed to the 13th today, so.
Change the human-powered little wheels only in whatever way is appropriate for the biking. And I'm confused about the ears and eyes stuff and the dog stuff, but we can discuss that all later. Okay, so moving on the agenda, council updates and discussion, planning department update. Mr. Grieve, thank you for sitting so patiently through our audit. Thank you.
Mr. Dean.
We look forward to seeing you on the 13th.
Look forward to it too. With pads on.
Absolutely. Everyone bring your helmet.
Yes.
Yes. Is that your update?
Members, going, oh, goodness. Hold on a second.
We're down to page 10 on the agenda for anybody who's going through the agenda with us, either online or here.
Good evening, members of council. My name is BJ Grieve. I work as the planning director in the planning department. It's my pleasure to be here this evening to brief you on the happenings and goings on of the planning department. In my normal form, I will keep it brief and then open it up for any questions you may have. Let's start very quickly with an update on what's coming out of planning board and coming your direction, because lately there has been a bit of a surge of things. The November planning board, which will happen 2 evenings from this evening, on Thursday night, has a duplex project, a conditional zoning district duplex project. You may recall that duplexes were allowed in primarily single-family zones with the use of a conditional zoning district. And we have had a taker on that, and it's been going through the process. It's been an interesting process, and we're very excited to present that to you after it moves through planning board. We also have a fourth phase of Morgan and Park South, otherwise known as the Target Development, which is a Whataburger restaurant that will be coming through planning board. Obviously, as you know, planning board does a preliminary forum, and then it comes to you as an evidentiary hearing. it's okay for me to share the titles of these applications. They are obviously out there. It's not disclosing any information that would be abnormal under rules of evidentiary hearings. Then we got a pretty big submittal deadline for December Planning Board. There were quite a few projects. They're working their way through completeness right now. It's all the staff are engaged with these. There are 2 major subdivisions, one in Mid-South and one in Morgan Park South. There are 2 planned developments. One is the New York Place project. You remember that Colin Webster got the CDP approved about 7 or 8 months ago. That is now coming through with the PDP. We also have Ace Hardware is coming back to amend their Phase 2 PDP because they want to change the land uses and the design in a manner that I did not deem would be an administrative modification. It was pretty significant in my opinion.
Which group was that? Ace Hardware, okay, thank you.
Yep, Ace Hardware. You remember you approved. That was when it came through. You reviewed and approved. It was primarily the ABC store, which was Phase 3A. And then Phase 2 was at that time going to be a Dunkin', and it was 2 buildings between the ABC store and the Ace Hardware. They came back and they wanted a bunch of changes to the buildings, a bunch of changes to the layout, a bunch of changes to the land uses. They requested that it be approved administratively as an administrative modification. I just felt it was too substantial. It would be very, very different than what you had looked at, and I wasn't willing to do that, so it's coming back through review. And then there's also a conditional zoning district for an expansion of the Reds Corner food truck campus, which is now a conditional zoning district, whereas back when it was originally approved, it was a special use permit. So you'll have legislative discretion on the design of that as opposed to quasi-judicial decision-making. So that is, some of those things that I mentioned for December, they're working their way through completeness. If some of them are incomplete, they may get bumped, but that's the gist. Those things have been submitted, and I wanted to put those on your radar over the next coming months as we head into the holidays. Then the only other thing I have to discuss or present with my time is coming back to what I presented to you last time, which was we are closing out Phase 1 of comprehensive plan implementation. You saw the tree protection ordinance, the landscaping amendments, the character districts, and the Pine Dean design guide. As those wrap up, the bulk of the work that staff does, there's still some tidying up to do, but the bulk of the work, which is the outreach and the drafting, is obviously done. So we're ready to pivot mentally into Phase 2 of implementation. I mean this is not hyperbole to say that the staff are eager and ready to go with the next projects. I want to lead into this by saying our staff, our team is ready to move mountains at your direction. We will do heavy lifting. We will do outreach. We will talk with people. We are excited to do that. It's what we love. What we are asking is over the next year, when people say, why are you working on this? We like to be able to point to it and say, because the town council have prioritized the following projects for us to deliver something back to them. We see success as taking your direction of a problem that needs to be solved, going to the community and talking about that problem, coming up with compromise type documents. Consensus is usually difficult. These are very controversial issues, but compromise type documents to solve problems and delivering them back to you. The moment we deliver the best product we can with the best presentation we can is when we feel we've succeeded. Ultimately, what you decide is completely up to you. But I say all that as lead in because these are tough subjects, and telling us to go work on these, I'm hoping for that understanding going into it that whatever you say to work on, we'll work on it.
I think that's awesome. I think we've all seen that you have implemented that same behavior through the comp plan process and Phase 1. So we really appreciate your hard work in doing it.
We have an incredible team. I'm so proud of our team. Absolutely.
And is there
I'm sorry,
anything else?
if you'd like, I can go through these very
do you wanna go
briefly. So you'll notice that they're lumped together by goals, but then under the goal, there are some projects that are related to those goals. So protection and enhancement of community character. Remember that during the comprehensive planning process, the loudest comment was, look, we get it, Southern Pines is going to grow. Look, we get it, Southern Pines is going to change. Just keep Southern Pines, Southern Pinesy. And keeping is regulation. Southern Pinesy is character. So that really results in administering this through not so much of use focused, but character focused. You obviously have received 2 character districts, and the third is a Pine Dean design guide. There are more to go. There are a total of 10 in the comprehensive plan. We believe that a few of those are not really priorities. We do feel that there are some others that are more priorities. If you would like to continue work on character districts, what I would request is that we be allowed to come to you with our recommendation for the next 2 or 3 character districts. We've had some preliminary discussions about it. We've realized it's more complicated than we thought, which is great. We're figuring that out already. But rather than come in today and say, more character districts, here's the 2 we recommend, it's more along the lines of, if this is a priority to work on more character districts, we'll come back in a certain amount of time and give you our recommendations for which next 2 or 3 based on resources and based on hot topics.
From an immediate, let's attack the biggest ones first, the 3 that we've done. Were they the sort of the biggest ones to handle? And if there's others, not that they're not important, it's just there's not as many issues in those areas.
Yes, sir. There's no question the first 3 we worked on were the most important in terms of the areas that people felt the strongest about the character. There are about 3 others that we recognize, 3 or 4 others that we recognize we can work on. Then there were about 2 or 3 others we looked at and said, I'm not really sure. So we already know those are probably low priority, but the other ones are going to depend.
Yeah, and I think it's also worth noting that they're the 3 areas where you're most likely to have the biggest impact from a regulatory standpoint when you think about commercial and office and multifamily and the things that you actually are able to legislate.
Yeah.
Where development is still possible. This is the areas we're
indeed.
looking.
Yes,
Do you
indeed.
need, before you get too far down this list, do you need direction from us on priorities? Or do you all want to bring us ideas for A, B, and C under one?
What I would love this evening is I can go through all these so that you know what the options are. I can speak to what we think are probably some priorities, and then I would love some direction. And if we can't do it tonight, that's okay. But if we want to come back then, what we did last time was we had a handout. We came out of there with 7 that we said, all right, this is it. We started assigning staff, we started assigning timelines, we started figuring out which ones we were going to grab consultants. I would like that because during the year, we kept pointing back to that and saying, that's why we're doing this. It helps us priorities, it helps us stay very focused. So, parking code revisions are parking is a major impact on community character. I was just having an interesting conversation a couple weeks ago with a colleague. She said that in her jurisdiction, she still argues about meeting minimums. And I said, I haven't had an argument about minimums in a couple of years now. Now what we're doing is we're fighting people who are wanting to do 2 or 3 times the minimum just for whatever reason. So parking reform, parking code revisions is really about going out and right-sizing our parking code to make sure that we're not getting too little and not too much. And the last time our parking numbers were visited was probably in the ballpark of 25 or 30 years ago in a very different era of people's thinking about parking.
Yeah.
So when you have just nothing but a minimum, that indicates a value of, hey, you need to have at least this much. More is better. And we're not so sure anymore that more is better due to the influence of how that affects character in terms of the built environment. Okay, sidewalks with commercial development. We have made big progress on that with plan developments and conditional zoning districts and character districts. But there's still some by right uses out there that are not required to do sidewalks. We think that's a relatively simple amendment. It was in phase 1, but we didn't get to it. It turned out to be more complicated because it's such a simple amendment. It winds up actually being very complicated. Goal number 2 is expand housing options. This one resonated with the planning board, who provided some feedback that promoting diversity of housing, which is different than encouraging more housing. Promoting diversity of housing is looking at zones which are single family only and saying, is this really appropriate to have vast areas that you can only have detached single family residential homes? Is it more appropriate to look at diversity of housing options? We introduced that topic with the text amendment to allow for duplexes in historically single-family zones through the use of a conditional zoning district. So you're still monitoring, you're still reviewing character. But looking at that and taking that out even further, looking at more missing middle housing options, please know that has the potential to be an extraordinarily
Controversial?
thank you. Just couldn't think of the word controversy. It has the potential to be very controversial. People feel very strongly about their single-family only zoning, and they don't like the idea of certain higher density structures being located on the lot across from them or next to them. Again, protection of community character. One of the tools we put in place, which is the conditional zoning districts, can help that a great deal. And then encouraging more workforce housing. More workforce housing is looking at density, not so much looking at diversity of housing options, but looking at what are your densities allowed in certain zones. It's looking at subdivision density. It's looking at access requirements. It's looking at a lot of things that tend to promote lower density tend to get away from higher density through the characteristics of the built environment and the access and things like that. And then studying the short-term rental issue. We defined it. We now have a better definition of tourist home. That better definition of tourist home is helping our code compliance efforts on a daily basis some days. It's just much clearer now what's allowed and what isn't. We appreciate that text amendment. But the issue is still very much, we get a lot of calls about it. Lisa, our code compliance officer, does a very good job of administering that situation, but it's always there. There's people who feel very strongly that they're bad, and there's people who feel very strongly that they're wonderful. So coming back to that and studying that issue in greater detail. Goal number 3 is improving transportation options. The comp plan does call for a complete streets audit. A complete streets audit is looking at, does this street cross-section as presently designed serve many, many segments of our community who have transportation needs, or does it primarily focus on the needs of the automobile and the automobile driver? So a complete streets audit there is actually a recommendation in the comp plan to specifically start with one street. It's Pennsylvania from US 1 up to, it's in the comp plan, I apologize, can't remember which street it is. It's not quite all the way to Midland, you're right in there. Yes, I'm sorry. It's the one that cuts over. It's just past Carlisle. Starting at US 1 and going up to just past Carlisle. Yeah, Gaines? Is it Glover? Yeah, thank you. That is the recommended first study for the complete streets audit. Also, there is the window of opportunity for applying for the NCDOT multimodal planning grant is coming up, and that could be something where we allocate some resources towards applying for that multimodal planning grant. We thought we'd put it in here because of the timing. These two?
Yeah.
Uh,
When you do the multimodal planning grant, you're gonna have to identify something, right?
Yeah. I would say yes, possibly. These two, in my mind right now, are different, but again, bring them together and saying, could this grant be used for something like this? Yeah, potentially. We could look at that. Look at a synergy there. Yep. Expanding local business and employment opportunities, goal number 9, that's coming back to accessory commercial units. Accessory commercial units, working those into our code, for anybody that doesn't remember what that was, right now we allow for home occupations, which is essentially doing taxes in your living room. It's very, very, very low impact. It's very, there's a lot of rules about it, but if you have a very low impact business, you can do it out of a room in your home. Accessory commercial units are more like opening a small flower shop in your backyard and having the ability to actually run a small retail operation on your property. Yeah, it's expanding home occupations to a scope where it does help small business incubation because it allows for a slightly larger impact business to take place on property that's already owned, but it has to be done exceptionally carefully because you can imagine in a residential zone, if you go too big or you go too impactful, then the neighbors are not caring for this. But there has been success on allowing for fostering more small business ownership. We all know the stories that many of the biggest business out there started in somebody's garage or in a shed in their backyard. And so that is something that really we don't have the capacity for in Southern Pines right now that can really help with that issue. It's one of the relatively few land use issues that can actually get at economic development and things like that. We don't run into a lot of things in our world that are in Natalie's world where the two. That's not true. I don't want to go off on that whole tangent, but in terms of zoning and land use regulations, this is one that's a low-hanging fruit potential for having an impact on local businesses. And then the UDO cleanup is sign code revisions. Sign code, we have to be very careful. As soon as you crack that open, then signage is an arms race. And so what happens is everybody that wants that edge on their competition wants more signage, and they come in when we're talking about signage because we're trying to get compliance with case law. That's all we're really focused on at first, but they come in and they say, while we're at it, they read in the paper that we're working on the sign code, and they say, I want more signs, I want more signs. Why can't we do this? Why can't we put them down the road? Why can't we have this? Before you know it, you've got some pretty full hearings when we're just trying to focus on being consistent with Reed v. Gilbert and Austin versus Reagan National. So, it's on there, we need to work on it, but it's a heads up that once we start working on it, oh boy, hang on, you never know where that's gonna go. There was a recent Senate Bill 166 we need to get some updates through. we're going to do this anyways, but I threw it on here because we can kind of get some credit for working on the comp plan implementation. And then there are some vestiges in the UDO. One of the things we've really noticed in working with the UDO on the last 3 phase 1 big code provisions, 1 that's done and 2 that are pending, there's quite a few sections of the UDO that are kind of an idea that had its day, and we don't use them much. You know, there's probably a dozen or 2 pages in there that are just about ready to scalpel out and get rid of because they're just not used that much at this point. Some of Chapter 6 in there we just don't reference. It came about during implementation of the last comp plan before this one. It didn't really work that way, and that's okay. That's the whole point. It's a living document. You try something, it doesn't work, you get rid of it. But I know there's always an interest in making sure that we keep it the leanest document we can, so we've recognized there's an opportunity to go out and go in there and clean some stuff out. That's it.
All right. Here's my question on the big picture. Which of those potentially do y'all have the capacity, obviously, as you can, to in-house, and which requires to hire a consultant? I know, like, for the character districts, we had to hire that Insight people and some other stuff. So where are we spending more money to say, if we do this, it's going to cost money versus we can get this done over time when we have an opportunity?
So I'm proud to say we came in way, way under budget in phase 1. We only spent about half of what we were budgeted for consulting. And we actually the only thing we used consulting for was that which required expertise in urban site design and urban architecture, and that was the character districts. Because we have the capacity right now on staff, we actually did a lot of stuff in-house. You really get a lot of bang for your buck when you do it in-house, and my plug for that is because the relationships you build when you're doing all that outreach, you maintain those. Our whole team now knows who to contact about various things, and we talk about it all the time. Didn't you talk to someone when you're doing that project? Yeah, okay, let's reach out to them as a neighborhood stakeholder, that type of thing. So I'm proud to say we came in under budget because we only use consultants when we need them. Some of our big consulting actually wound up being David Owens, who was formerly of School of Government. As a reviewer, he's reviewed the tree protection ordinance, he's reviewed the character districts, he reviewed the conditional zoning districts. So about the only one in here that I really think, right off the top of my head, that we would want to have consulting would be, again, for character districts, because character districts, if you're working through architecture and if you're working through good site design, there's benefit in consultants who've done it across many jurisdictions and can bring that enhanced perspective.
Aside from Pine Dean, are there other districts that you feel are some urgency regarding character districts?
That's part of the discussion that we have started, but I'm not really ready yet to go on the record with that in terms of which ones. At first, we were thinking that it might be the districts where we're getting the most feasibility inquiries. We want to make sure to get design right. But some of those are the commercial districts, which right now are either under a highway corridor overlay or they're pursuant to our architectural code, which is pretty good. Our current architectural code is still pretty good. So in other words, a character district for, say, the 15501 and US 1 corridor. But we've got the highway corridor overlay. We've got a few things. There's some, you could tweak it, you could improve it, but then you get to think more about other character districts potentially that are, we have 2, the rural character district and the horse farm character district. You begin to ask questions about what are those characteristics? We may not get a lot of feasibility inquiries out in those areas, but there may be other priorities that we want to be contemplative of before we say for sure which one's the way to go.
So this is a question for probably both you and Attorney McCarley. In regard to I don't know what the status of the state government being interested in turning over ETJ districts to the county as opposed to the town, and the fact that that would detrimentally impact horse country. Does it serve us any purpose in our argument that that is a part of our character and we want to protect the character of horse country? Does it serve us well or not well when we start to tangle with state legislative requests and ETJ concerns? Any insights on that from either one of you? I do too. I agree with that. I guess my question was not well put. I mean, to your point, I appreciate your concise nature. Thank you. My point would be, what do we do to protect that character district and to show that we have an earnest desire to maintain our connection with horse country, and they have a desire, I think, to maintain their connection with Southern Pines? How do we function to send a message to the state government?
Horse country is probably a great example for us to use
I agree.
Pretty soon, there is a webinar put on by the League of Municipalities, a 1-hour webinar, basically walking everybody through the case for keeping ETJ. Might be good for us to sign up for that.
It's at the same time as the PNIC groundbreaking, but yes. December 4th.
I'd be interested in pursuing that with you. I'd be really interested in doing that. Let me know when that is.
I may be mistaken. If we wrote the most fantastic character district for horse country and it was the best in the country, if that law passes, it's useless, right?
Yeah, that's the flip side.
That's-
I'm hearing
that's my
potentially
question.
by doing it, we show we're being proactive and it's meaningful and we're protecting it. The flip side of it is you do it and then you have no jurisdiction at some point.
Right.
Yeah, it's.
And my question is, what helps us get to the result I think we all want, which is, I agree we should keep it, and I think everybody on council would agree with that.
I think we built our ETJ into our comp plan. Like that was I think we made the effort to
Right.
plan for our ETJ in different areas in our comp plan. And I think showing ETJ residents' involvement and agreement with how they're zoned and how, whatever their character is or however it's written in the comp plan for those areas, if we can prove that they agree with it, then I think that we have a better chance of showing that we're governing for the benefit of our residents in our ETJ.
Right, and I think that component already exists. I'm wondering if there's a way to strengthen,
I think that's the argument to take away our ETJ, is that it doesn't exist.
I'm sorry, you think it's an argument to do what, sorry?
I think I think the General Assembly is arguing to take away our ETJ because it doesn't exist. We're also getting, I feel like, I'm not sure that this is, besides the character districts, which I think
also
staff
costs money.
staff wants to come back at the ones that you all think are, so I don't want to go too far down the rabbit hole of the ETJ when you all should bring your priorities on which characters.
Yes,
And then
ma'am.
we'll
From our point of
discuss.
view, if you like what you got when it came to character districts, across the board, if you just like what that was, we're not saying that we would bring them back in the same form. Think how Pine Dean pivoted. We may bring in something, it may not look like the previous three. We may come in and say, because all we're looking at is, what is the best way to protect the character of this area? Turns out it might be subdivision standards for a certain area, like that's going to affect the character the most. Well, that's not a zoning overlay, that's not a design guide, that's just going in and tinkering with subdivision standards in, let's say, the rural area. Forget horse country for a second, because that's but if you like what you got, all we would know now is, yeah, work on that, work on a few more of those in the next year with phase 2. And that's when then we'd come in a month, plus or minus, and we'd say, okay, we've given this some more thought. Here's what we'd like to focus on for character districts. What do you think about this? What do you think about these 2 or these 3? It's like a sub-conversation that would happen after that.
In establishing the criteria for a character district, how much time is spent in outreach with the community who are members of that district?
The majority,
Thanks.
yeah. The vast majority, in fact.
So
When it came to downtown, now, getting participation can actually be like pulling teeth. I'm just,
And
that's
that,
that's
I
just the
understand.
truth, because there's nothing presented to say, here's a change that's going to happen. Don't you have a strong feeling about this? What you're doing is you're saying, hey, come out, we want to talk to you about what is quintessentially your area.
Right.
Define it for us.
Right,
And that's
right.
a pretty ethereal conversation to ask people to come out and participate in.
Go ahead.
The cards that were sent out
Yeah.
for West Southern Pines Character District, downtown, or Pine Dean, was there a way for you to track who scanned the QR code, like the number?
No, I could find out if we have, I know with the comp plan, we were able to get data from the visitorship of that website. How many unique visitors based on their IP address? I don't know if that's something we can do with our data. Jessica's telling me yes, it is, because what that scanned to, was what's it called, Smart City, or it's the software that Gerald uses.
We have a subscription to Bitly.
Okay, thank you. Yeah, we could see how many
That'd be
used
good
it.
to know. If you sent out 2,000 and, 3
Yeah,
people
yeah.
got it,
We were blown away. We thought we sent those postcards out and we geared up for the next 72 hours, and we heard from 5 people, 3 people the first time and 2 the second time, and we were just blown away. I would thought for sure there would have
It
been,
may have been the result of the information gleaned from scanning the QR code.
yeah,
We won't know until we know how many people scanned it.
yeah. Bill, I need to come back to your question. The one other one that we would very likely need consulting for would be the complete streets audit. That would be something that you'd bring in transportation. You'd bring in consultants that have expertise in transportation planning.
Which is why I brought up the multimodal
Yeah. Yes, sir.
grant. Well, we should expand it.
I mean, I have ideas on the things that I think are priorities. I'm happy to share them. Does anyone else have?
I was
Go
gonna,
ahead.
just one that sticks out to me is the parking. It's one that comes up every time something comes up. It definitely has an impact on the character. I don't think it's gonna be one, I mean, yes, there'll be some folks that'll probably object to wherever it goes, but probably not many compared to tightening that up a little bit. So that's one to me that stands out that I think we could do that would impact a lot of areas and is important. I don't know how you guys feel.
Yeah, no, that was on my list.
Multimodal planning grant has a deadline too, so that's obviously, at some point in time, becomes a priority.
Is that a January or February deadline?
The multimodal planning grant.
For some reason, I think it was March, but yeah, it comes, yeah.
Okay.
Somewhere towards the beginning of the year. Yeah. First half of 2025.
Okay. Yeah, so that's, I think the diversity of housing is also really important.
Yeah.
I think so many of the complaints we get as a council, or I get individually, are people just don't like the apartments. They don't like the large unit apartments. And if we can get diversity of housing, maybe we can cut down on some of the large apartment units and kind of get affordable or medium income housing in other areas that fit into those neighborhoods better.
I could tell you that the way that process would start would be to say, find out by doing outreach, what is it we do want? And then doing outreach with the development community and saying, what is preventing you from bringing this to the market?
Okay.
And then incentivize that however is needed through zoning reform, both figuring out what's needed and then how you deliver that. And that's somewhat of an oversimplification, but that's basically what you got to do to do that.
I was gonna say also the ACUs. What did you say?
It all starts with affordable land, and that's not available.
They have limits on what we are able to do. I think the ACUs, I think supporting small business creation is a big deal to me.
Yeah, I like that one. I mean, obviously, if we get into it, we would really define it. Because as you mentioned, I think there's a slippery slope there that we would want to be very careful with, but I think the concept is interesting.
It would most likely use that new tool we've got in the toolbox, the conditional zoning districts. And if it's rooted in that, then yeah. I've got those 4.
So is there anything on the list that someone is not interested in pursuing? Look at it that way.
I mean, I had the sign code revision marked until you started talking about it, and then I unmarked it.
It's going to blow up. Yeah, I'm interested in the sign code.
I don't want to open it and have people demand.
It's already open.
When
already
it comes to
open?
sign code, I think that if the town council,
I'm sorry.
Just
I'm
with-
asking
just,
you if it's
just
already
with,
open.
no, just with context to me. People are concerned about it. Yeah.
Oh,
It's
okay, but
already-
we haven't started revising it.
No.
Okay, that's what I'm concerned that we open it and
I
start
think
revising.
you're just referring to concerns that have been brought to you.
Oh, okay, okay.
In my professional opinion, if the town council were to say, we want to look at the sign code, but we want to make it very surgical, very strategic for consistency with recent case law, and we're not going to expand the scope to a broader discussion, we need to get it updated to be consistent with case law, but we're not going to make it, then that can help. It can set the expectations that, no, we're not opening up the sign code to make bigger, taller, brighter. But if we just say, planning staff, we want you to focus on what do we need to do to our sign code to be consistent with 2 recent case law as well as all applicable current state statutes, bring us a draft that is focused on that. And then that very specific task we can now do with, quite frankly, slightly less outreach because we have the expertise to amend the code and bring it into compliance with the both consulting with David Owens as well as with Mac. And the outreach would be going out and poking at issues that are just issues of competition between two businesses across the street from each other. And that's where the trickier issue is. But if that's not it, we do a modest amount of outreach, but again, there's not much outreach needed because the case law is what it is.
Yeah. It sounds like item 5, the UDO cleanup, that B is required anyway.
Yep.
C is easier, and then A is the one that's going to be the most complex. So, I mean, I'll let you all make a recommendation on how you want to approach it, but
If everybody wants to give their preferences, I would say for me, it's parking code revisions, diversity of housing, and workforce housing.
the street audits is on mine too, in the grant.
Yeah, I think that's gonna by itself is gonna be a priority because of the deadline.
Oh, it has a deadline, yeah.
I think you guys have just about covered the list.
I have not heard character district. Sounds like maybe we want
Well,
to.
I think I think character district as it relates to Pine Dean only would be on my list because I think,
But Pine Dean, instead of a character district, we have a design code, the design, so it's already, we've already done that, right?
it's the entrance to the town
Oh,
of
that's,
US 1.
that's Ponding, yeah.
Yeah.
That's,
We started it last month, or this month, and we're gonna finish it in December.
yes.
Pine Dean Design Guide has been adopted.
Yes.
You moved, yeah, you made a motion on that one.
But as far as the
Done.
character district of Pine Dean.
So we pivoted away from a regulatory character district towards a design guide that is an appendix to the comp plan.
Okay.
My professional suggestion on that would be, let's let that breathe for a little while. Give it 6 to 12 months and see if it works. If it does work, why? If it doesn't work, why? And then possibly come back with something different. But letting that breathe so we can deal with a few inquiries. We have one right now, that just an inquiry, which is about the property right there at the corner of US 1 and Morganton. And now with the design guide adopted, there's a lot more potential with that property. And so I'd like to let that breathe and see where that goes.
Okay.
Yeah.
And then you're talking about the Reds Corner conditional use.
That is a corner, that's a corner of that is within the Pine Dean Design Guide. That'll come through for conditional zoning district. It has not been deemed complete yet, so it will be effective within the Pine Dean Design Guide.
Right.
So that would be one where we would see the effect that may have on design. Yeah. Yeah, they will be vested, it will be vested under the Pine Dean Design Guide.
It'll be nice to see how that plays out.
Yeah.
Another thought on that is if we want to wait and see how the two adopted character districts, how they play out.
I think
So you give it a year to breathe. So maybe in I'll say phase 3, you come in, you say, hey, how have character districts worked or not worked? If not worked, then it's a good thing we didn't jump into 2 or 3 more with phase 2. So based on what I'm hearing here for some of the other priorities, that's an option is we let character districts lie. We let the dust settle, if you will.
Yeah, the only stipulation or change I'd say to that statement is if something comes up where we're getting a lot of interest in an area that's highly developable, and you feel like we need to implement a character guide, character design, whatever the words are, character district in order to manage the changes in that area, that you bring that to our attention.
This list you've given, if I may run down real quick, this list would be, we get going on, I'll just call it very generally, parking reform. I'll call it, we have the, I wrote down MM. I'm like, what did that mean now? Thank you. This is like, we have the multimodal grant. Coupled with the street audit situation, we'll do research on that to see can we use the grant to pay for the audit, that type of thing. Then I have 5A, B, and C, including under sign code, basically just working on consistency with case law as well as state law. And then accessory commercial units, as well as diversity of housing, as well as how to encourage more workforce housing or missing middle housing. The comp plan really gets at missing middle, which is that gap between large multifamily residential and detached single-family residential on relatively larger lots. So everything in between is kind of referred to as missing middle. What is the sweet spot? What is wanted? What is needed? And how do we bring that to market.
So 2A and B can almost go together.
Yeah.
Is that what you're telling me?
Good.
BJ, I'd like to ask for your quick reaction to a thought. And it's a little bit of a chicken and egg type of deal. But when we talk about the promotion of the diversity of housing, which is about kind of moving some units and different things into single-family housing areas, you are on the verge of having 3 adopted character districts within which an application for a CZD to do exactly that could now follow some guidelines about the character of that district. Would not the same sort of thing be helpful if that application for duplexes, townhomes, take your pick of the diversity, we're going into an area that we don't yet have a definition or character for, i.e., should the character district come ahead of the introduction of diversity of housing language into an area? Which is not to say that maybe you don't do the diversity of housing, but you limit it as a pilot program in those 3 areas that you have or will soon have character districts. I'm just trying to think through the natural order of things to make an application best for you and your team to work with a pre-applicant and for the council to review a product that's in front of them within the context of where it's being proposed.
Yes, totally agree with that. What I would riff off that and add to that is probably one of the areas for study when it comes to both diversity of housing and encouraging more workforce housing is base densities within many of our zones. When you consider the type of housing product that is becoming more common, such as a 4-unit townhome, and then you look at in our RS1 and RS2 zones, how you do the multiplier to break down the number of units you can put on a piece of property, that's probably where we can get the most bang for our buck is in that density issue. And that's not so much a character of design. And the reason why I focus on density more so is because then if we pivot to, if we're talking duplexes, triplexes, et cetera, there are many that we can't regulate much design anyways, unless it's a conditional zoning district. When it's a conditional zoning district, and that's the delicate balance there is, okay, if we're going to allow a greater density, but it's done with a conditional zoning district, now the design is an applicable part of a discussion. It's because conditional zoning districts, conditions have to be voluntary. So you come in, you say, hey, now you're asking for more density. If you're asking for more density, are you okay with the community having influence on design? Well, the community says you can't, no, what the law says is that we can't dictate the design of the exterior architecture of structures built to a North Carolina residential code for 1, 2, 3, and 4 family. But if we're allowing greater density through the use of a conditional zoning district, then it becomes voluntary. I hasten to add all that only because it's pivoting away from character districts where we're applying essentially another architectural code.
Right.
It's pivoting away from it by saying you can get more density with a conditional zoning district, and we're going to pick up design with that. But it is still consistent with the premise of incentives rather than carrots instead of sticks, because you're saying you have a by right base density right now that you can develop at. Go nuts. And no one will mess with your design, no one will mess with your, but if you want more density, here's what you're getting, and all you have to trade for that is some voluntary conditions on design to make it fit.
Right, and in certain character districts, it might be through, and I don't want to get too far in the weeds, BJ will note, but the big house concepts and some of the different things we looked at with Matt relative to.
Absolutely. That's the goal. The goal is to bring in a triplex that looks like a larger single-family home.
Yeah.
And you suddenly put it there, and everyone's against a triplex. And then at the meeting, they see that triplex, and they go, oh, well, wait, that's not too bad. That actually is a good-looking building. That's what you're talking about? Well, how do we make sure it's going to look like that? Conditional zoning. So,
Thank you.
Jay, so last time we went through this, when it was phase 1, you and your team put together, now that you have our priorities, you put together sort of the high priority, low controversy, and a scale of the things that were easier to do up to more difficult. Is that something you all feel like you could work on with this list?
Absolutely. We could
Okay.
bring it back to you. We could present it that way and then kind of have a moment where you just approve us on that. That helps us over the course of the year. I can't tell you how often we come back to that and say, we're doing this because the town council requests us to do this. So yes, we'll come back with these lists. We'll make that matrix and we'll write it up on a list that you can approve.
Awesome.
Final question.
Yeah.
You're in this all day. You asked us. So did we miss anything where you're like, gosh, they really needed to have picked that one? Because we really need that addressed. I mean, are we missing anything in that regard? Or are you solid with what we discussed?
Actually, this is great. It's also very consistent with what we asked the planning board is Thursday night. And when this meeting got bumped up to tonight, we weren't able to take this list to planning board first. So we emailed planning board and asked them. And from those we did hear from, your priorities are consistent with theirs. So there's that synced up really well. There's also, I'll just say, you had as a group, a great idea about character districts, which is, it's not like you're against them, but it's like, just give them a year to see how these first, essentially 3 play out, see what we learn, and then we can come back to it later. I probably would have walked in and said, hey, let's keep going with character districts, but I do like the idea of pausing and seeing where the first 3 get us. So that was a great idea.
Cool.
Thank you.
Thank you. Okay,
That's your guys' idea.
if there's nothing else from the planning department, let's go over our calendar. There was a draft calendar.
For the staff, I have a question about, I guess, April, the 9 a.m. budget retreat, that is not the 18th. The 18th is a holiday, is that right? That's Good Friday? So there's no date proposed for the budget retreat at this point, is that correct? Okay.
I don't,
Like 4 options.
oh, there's.
There's 4 options in the
Okay, I'm
memo.
sorry.
Wednesday, the
Oh.
9th, Thursday, the 10th, Wednesday, the 2nd, Thursday, the 3rd.
Wednesday, say it one more time, repeat, sorry?
Either Wednesday, the 2nd or 9th, or Thursday, the 3rd or 10th.
Okay.
I'll go ahead and let you guys know. I have let our manager and our mayor pro tem know that I'm going to miss February's work session, not work session, February's meeting, the 11th. But I've gone ahead and let both of them know, so I can just tell everybody else. Does anyone have conflicts or?
In April, I'd love to see the all-day budget be either the 2nd or 3rd. It's just brutal when we do the meeting on the 8th and then have an all-day session on the 9th or 10th, let's be honest. It's pretty brutal regardless, but if we did 2nd or 3rd,
You'll get no argument out of me about back-to-back.
back-to-back is tough, and we want to be coherent and make responsible decisions, so I'd vote 2nd or 3rd for that, unless people have a conflict then. And I don't know for parents who have kids in school when your spring break is.
It's not until next week. It's 14th to 18th of April. It's super
Okay.
late. It is,
18th,
The
19th,
18th.
20th. Yeah, the
oh yeah, sorry,
18th is Good
18th is Good
Friday,
Friday,
so.
yeah.
So Easter's the 20th, and your spring breaks are the week ahead of Easter. Is that true too, Bill, for your kids?
It's usually in and around there. It should not be.
Not a definitive answer.
I'm pretty sure it is. I think I've looked at your schedule.
Be 2nd or 3rd.
Okay,
It's true for my kids.
yeah, I know. Your kids are homeschooled, right? Yeah. So I didn't worry too much.
Are you sure? Because that's a Sunday to Thursday. Double check the year on that one.
Right, sorry.
It's okay.
Thinking 25, 26, because that's the budget year we're looking at. Sorry, you guys are right. It's 14th through the 18th.
Okay. Deborah, I know you stay very busy on Wednesdays. Is the 3rd better than the 2nd for you? The Thursday, the 3rd?
Nothing.
Okay. Bill, how does your Thursday, the 3rd look?
Okay. I don't know. Like, it's so far out. I don't know.
I have that I have an agenda meeting with Reagan.
We might skip that.
Yeah,
All right, so
and I've got to run payroll that day, but that can be done anytime.
let's do April 3rd then for budget meeting.
Okay.
Is that good?
And I'll check. I'm sure there's a more detailed family calendar that I'm not aware of that I will go look at after this.
Okay, so tentatively, our budget retreat is 9 a.m. on Thursday, April 3rd.
About November, where nothing is boxed in for any reason. In the memo too that I missed, sorry. Beth, what do you know? Go ahead.
It's in
It's
the
election
memo
on the-
because of the way that Thanksgiving falls,
Right.
and then the fact that it, the election.
And the election.
So I suggested moving everything up a week, doing first and third, and then you run into election issues.
Yeah, election is on the
So-
4th.
I need to just change it to a Wednesday instead of doing it on a Tuesday.
What's the 11th?
Veterans Day.
Veterans Day holiday.
So your suggestion would be the 5th and the 18th?
She's suggesting, Wednesday, the 12th of November?
You can do Wednesday the 12th, but then that puts your work session, unless you're gonna have them back to back like you did this time, your work session's gonna be Thanksgiving week, which.
Right, which is not, that's not going to work well for people.
I won't work well for advertising stuff.
Y'all good to meet? the day
So
after the
if I propose the 5th and the 18th, what does that do for everybody?
So,
Wednesday, the 5th is hard on Deborah.
well, it'll also be at the Douglas Center, right? And so there's election stuff out of there that soon?
By Wednesday evening,
How
yeah.
about the 6th? What's wrong with the Thursday night, 6th and the 18th? Does that work better for you, Deborah?
Thursday's always good, yeah.
Does that conflict with other things you're doing? Do you have a Thursday night commitment? So if we did a 6th and the 18th, and we work around both the election and Thanksgiving, does that work?
It works for me.
Works for me.
Okay, let's do it. So Thursday, the 6th is the full meeting, and the 18th is the work session.
Do you want to discuss the time we take off in the summer now or closer?
Yeah, we talked about having July only having one meeting.
Yeah, the
Do you want to just combine the meetings and moving to the 15th? Or go ahead and have the business meeting on the 8th
Oh.
and just skip the work session?
Oh, I would skip the 8th. That's the,
Yeah,
like the
8th is
4th.
close to the 4th, it'll be on
Yeah.
Friday.
You guys are so funny. 8th is close to the 4th. Okay.
I mean, just the way it works for me.
Why don't you just keep it on the 22nd and
Keep
have
it on
a
the
regular
22nd.
business meeting?
Exactly.
That's what I was suggesting.
22nd, next the 8th, which is coming right off of the 4th weekend if people are trying to, I understand what you're saying, Bill.
Keep it the business meeting on the 22nd, not the work session.
Have both, I think,
Yeah.
is what
Oh,
the
same
mayor
thing.
is
Yeah, we could do
suggesting,
that.
yeah.
I didn't hear
Let's go
that.
ahead and have the business meeting at the end of it. Attempt any work session that's necessary before. the
Just
12th.
for clarification, given that it will be the business meeting, do you want to have that at the Douglas Center
I think
and
so.
at 6 o'clock? Or are you looking at 3 o'clock? And July work session
like
tends
a-
to be very light because we just got through the whole budget and
Right.
everything. Yeah, I was going to say, we might just want to have a business meeting, and if we have to have a roundtable or something at the end, or,
So 6 o'clock, Douglas Center on the 22nd. I
Yeah.
think that makes sense. Okay.
You're gonna like send us an update of this or what? Okay.
Just 'cause you have to.
Reagan, you said you had an issue with the work session in February.
February, don't worry about that. Yeah,
Just have Jessica handle it.
yeah, I'll either be here or I'll have Jessica handle it, just depends on what we're doing come February.
Okay. You've been volunteered.
Voluntold.
It will be September work session and October, well, no, it'll be September work session. I know I will not be here for that.
The 23rd?
Yeah.
Okay.
Probably be back for October meeting, so.
I think that all sounds fun. Okay, Beth, do you have all the dates that we've gone over? Okay, awesome.
We're gonna get a, like,
Get an updated
I'm gonna
copy of,
create the new one and
Yeah.
then you'll adopt it.
up it in December, and we'll,
oh, I was talking about the calendar on our phone.
Oh, I did.
Good luck putting in one date, though, and having it repeat every month
Right.
now.
Every 2 weeks, right.
So we don't have a work session in December. You'll bring that to our general meeting in December and we'll adopt it at that point.
Yes, which is on the 17th, as a reminder.
Okay. Oh, and my battery is slowly dying, quickly dying on my computer. All right.
Wait, I'm sorry. You're talking our next.
This year,
Yeah, okay,
yes.
thank you.
I'm sorry.
It's kind of like when you say we're going to leave the insurance payment the same. I'm going, which same? Okay, right, got it. Okay, thank you.
So I'm just making sure that I have it right on my calendar. 17th, December 17th. Okay, yeah, I've got it on there. Okay. Council roundtable, I emailed you guys this letter that the other municipalities had put together on the ETJ. Reagan and I had talked about it, and I've talked to Deborah briefly about it as well, because I was afraid that she might have to leave early today. I have a printed copy for you, but you were also emailed a copy. Reagan has actually gone through and done a red line copy on some of the, just cleaning up some of the language that maybe sounds more appropriate, such as fourth paragraph, instead of saying attractive retirement destinations, maybe it's just attractive destination. I'm not sure why we're specifying it's retirement people. My personal thoughts is that the General Assembly is looking to how we manage our ETJ and making sure that we're managing it for the benefit of the residents in the ETJ. And I want to make sure that none of the language in this letter sounds like we are managing it for the protection of our citizens in the town at the detriment of anyone in the ETJ who's unable to vote for us. So my recommendation would be that we edit the letter before we sign it, and I would respond to the other municipalities, just letting them know that I want to walk very carefully. I don't want to give our legislators written proof that we are mismanaging our ETJ,
The
so
second
I would
paragraph
edit
says
it.
that.
Yeah,
You know,
I don't feel comfortable signing it as is.
I
would be
do
my
feel
thoughts.
like everybody on this list is unique.
It's true.
And so,
Maybe everyone has a different letter.
yeah,
But I can pass along that recommendation.
Where did this originate?
Wendy Butner out of Cameron wrote it. But we all manage our towns and our ETJs very differently. If you all, I do see a point in writing a letter. With your all's blessing, I will use this as a template, edit it, and then send it back out to you guys by email and have you all redline it or edit it in a way that reflects our town.
Did you happen to pass along my red line version I sent you, or
Not
as
to
part of your?
everyone.
Okay,
No, I think I sent the version I got from Wendy to everyone, but I do have it written out.
okay. And again, I made the effort, sort of along the lines of what the mayor is talking about, to kind of remove references to the city as an entity, kind of that idea of their citizens on both sides, and
right.
it's all open to change. But it was done out of an interest in trying to utilize the base document and not start from scratch,
Yeah.
so.
Yeah, I've got it here if any of you want to look through the redlined version. But I would say that we change it more. As of now, we're just being asked to sign that version. My personal feeling is that we should not.
So the suggestion would be to have the group agree on some language, put it on town letterhead, and send it as a separate document.
I think
She'll
so.
send us the next phase.
Yeah, I think let each of the council members see the final before we send it out.
Of hue as is used in the paragraph on the top of the second page. Of hue and saying it's a color. It's color.
We would
And
like to note that there is no hue.
hue and cry,
from
and
our
I'm
communities.
wondering what their point was.
I don't know.
Go on the
It's the
backside.
top of the back. Yeah.
Top line.
There is no hue and cry from our communities. I'm not sure what they meant to say.
But the other,
Language.
yeah, the other concern,
Yeah, and not, they ain't saying nothing, just.
just feels, I mean, even that line, it feels like it is our citizens, our voting, tax-paying citizens don't want to change. But if it's not reflecting what the ETJ residents want, that is the basis for them taking away the ETJ. I don't want to give them ammunition to take away our ETJ.
So apparently, according to AI on my phone, hue and cry is a noun that has multiple meanings, including
So
a
hue
call
and
for
cry go
help.
together?
Yeah, they go together. A loud outcry to summon bystanders.
Supportive cry is a hue and cry.
It is,
Okay.
they together, those
Okay.
words, yes.
Wow.
If the
Congress
robot
people
is correct.
understand that.
But it's correct. Yeah. Thank you. I'm here now to the point in the meeting where we're
Thank you,
relying
Bill,
on
and
AI.
AI.
Okay, great.
Are you guys comfortable with me working on a letter?
Good.
Okay. I'll try to have something.
Comes from Latin.
Oh my God. We're now,
Hutesium et clamor, a horn and shouting.
wow.
This is our learning opportunity this evening.
Put that in ours.
Things that Anna learned.
Yeah, so I would suggest eliminating hue and inserting hortative, if that's what we're trying to say.
Would you all like me to make the recommendation to Wendy and the other municipalities that perhaps they all write their own? Or just that we're writing our own in the
Or
reason and
that
see how they feel?
Some of the group may want to sign this one.
Okay.
If it, and yeah,
Do
and I
what they
think
wanna
every
do.
town
Okay.
makes their individual decision. I can see some towns maybe saying, yeah, this is great.
Okay. Well,
And I would prefer that we have,
So one of the things that we heard when we had that in this room, when we talked to, and all the municipalities came,
with
Was
congressman and senator.
that some folks in the ETJ have hewed and cried to General Assembly members. And not just here, but statewide. And so one of the reasons this bill, my understanding, was withdrawn was to what they called a study bill. And so while I think that our situation is unique in the sense that they are viewing statewide that ETJ rights have been reduced to people that cannot vote for you. We have not. And so that's why I think our letter is distinctly different
Yeah.
from some of the others on this list.
I think that we are trying desperately to make sure that we do represent all.
H-E-W-I-N-G, right? Hewing to it.
Hue and cry.
No, you hewed and cried first, and then you went there hewing to it. You're
Yeah.
just trying to mess with us, right? But my question is,
I don't think I said hewing.
oh, I hope not. My question, okay, so your point is that we have not created a problem for anybody in our ETJ?
I don't believe so.
Okay,
I haven't heard a hue and cry.
well, get ready, because there's somebody out there hewing and crying.
The second thing, and I swear there were three, so I apologize if I bring something up later. There is blue signage that DOT is granting for some of our golf courses. Not ours specifically, but golf courses in North Carolina. It is similar to the traffic signs. I was waiting for a sample from someone that I don't think I got it, but being that we have such strict signage regulations, I am asking for your all's opinion and suggesting that we ask DOT not to approve any of the golf course signage for Southern Pines, because I just think that we have a good sign and design code for that reason, and I don't want to add additional aluminum sign, what are they?
I'm just wondering what it is, because some exist.
yeah.
They've done that before. I think Tullamore did it. I've noticed them before. It's weird. It's just like the sign is like Tullamore this way. I think it's part of the same program. I have seen them. It's just not that many people took advantage of it.
They're street signs though, right?
They're just kind of the metal signs.
think
and
they're
they
metal
sort of-
directional
When I've
signs.
seen them, I'm like, it's bizarre. Why would that one place have a sign? But it sounds like maybe.
So
it
we're
can-
talking about something similar to like the signs that direct people to the historic district
Yeah,
and some
or-
different things. And all we can, I think, I was just asking Mac, I think all we can do is request. We don't really have the authority to
Right.
stop them from doing
No,
it.
I was told that we can contact NCDOT and ask them not to approve any signs for Southern Pines. That is my recommendation, and I'm asking you guys to either agree or disagree with that.
I personally agree. I wonder if this is going to make me feel like the skate park made me feel after we made rules that we didn't check with the skate park people on. Do the golf courses wish that they existed?
I'm sure they do. I think as a business owner, I would love to have casino guitar signs all over, and if somebody else is going to pay for them, by God, that's even better.
I think that the,
But I think
they
that we
pay for them.
have, okay. Well, DOT has the granting authority, so I would just like to stick with our sign code that we have rather than allowing additional ones, if that's possible. And my phone doesn't work apparently, so I can't find a sample of it.
I see so both sides of the issue.
Okay.
How did that come to your attention?
Someone who is on the board for the DOT brought it to my attention.
Okay.
There's been some requests for them, I guess.
I did not get that much information. The recommendation was, because of the number of golf courses in Moore County, the thought is
Have
that
them
they
everywhere.
eventually start to look unattractive. Yeah, they're everywhere.
Adopt a highway, adopt a golf course, yeah.
I would simply offer, and I agree entirely with you, because I would offer that this is sort of what BJ talked about when we talked about signage. Even delving into the issue of getting along with those two cases that he referenced, this is the sort of, because you start getting into content and why a golf course and not a guitar shop, as an example. But these are the types of the decisions as we open up this sign code you'll be having, and the big one always becomes political signage in the right of way.
Right.
Because we have carve-outs and the state DOT has carve-outs, and it's pretty explicitly not an allowed carve-out. So this is a perfect example of the types of conversations you will get into, the deeper and deeper you get into messing with your sign code.
Well,
But-
and
but
also
the
you already
conversations that need to be had.
You already have one, right? And so that one stays, right?
I swear I've seen it.
There
Maybe
is.
that program went away and it's not there
I
anymore.
think there is.
It was something like that.
I don't
Yeah.
remember, but I've seen it.
I've,
It's the state-made sign.
and it was like, it wasn't just golf courses. There was like points of interest could do it, because I would see them occasionally for like a flower field
Right,
or
right,
something.
right.
It was weird. But I
Right.
haven't noticed them in a
Big
while.
bloomers, Sanford.
Maybe
Got
it
it,
was,
you're right. Mac, you're doing your body language, that means you want to say something. Okay, just, I'm trying.
Couldn't see you at all.
Sanford has a sign. So then it is easier to say we were wrong and yes, bring the signs, than it would be to say, take the signs down. So let's take the signs down. Yeah,
Let's just not let them go up.
yeah, right. Let's try that. Let's see what happens.
To DOT and let you know their
Lots of the
response.
car dealership logos all over US 1 as well.
That is not our jurisdiction. I know. Okay, that is everything I had, or at least that I could remember. Round table, anything? You guys ready for Thanksgiving?
So in the last work session, I mentioned possibly coming up with for staff to come up with a format or a policy for how we communicate to residents, business owners, in regards to utility work or road paving or tree removal or whatever. I don't know if we need to, as a group,
Vote on it? I think if they come with a recommended policy,
right, I didn't know if, when I mentioned it last meeting, I didn't know if anybody is working towards that or if you were waiting for direction from 3 people.
Actually, I believe Mike, I know he was working with Gerald and with James and others, but I think Mike was putting something together on that. There is a policy, and there's quite a bit that does take place already, but I think that's something he'll be coming back to you with.
I did follow up with the sewer work on Indiana with 4, the water and sewer that was happening on Indiana before the paving. And it's anecdotal, but 3, one business owner did say that someone came to that. You told me that they make an attempt, they go
Yeah.
in, they say, and what happens after that? One business owner said that happened in their business. The other 3 said they saw no one. All in a row in Indiana. So I just want to make sure that, one, I don't think that's sufficient. You know, like I said, my information is purely anecdotal, but a policy that is less likely to, well, I told someone on the street that we were getting ready to do this work. I don't, you know, I can't
So
patrol if they tell the boss or not. So there's got to be another way, I guess, because the
in written notice other than verbal,
Yeah.
rather than
two
verbal.
of the business were very upset by it.
And I agree with what you're saying, and I also think there was mass confusion in the neighborhoods about what streets were closed and what streets were
During the
not.
paving,
Oh, my goodness. It was crazy. It was like a maze trying to get home. So somebody needs to be in charge of the detour.
so what happens specifically on Indiana? Because in the parade, I think last year, like Christmas parade last year, is the road closed sign goes down on Broad Street. And so people come down Indiana and they get to Broad Street and they can't turn left anymore. And so it creates this cluster of people spinning around trying to figure out. And so you get a lot of cars jammed up down there. So the road closed sign needs to go up at Ash.
Turn.
And so that
Even US 1.
they did,
Bring it on up.
they actually came last year and moved it immediately and it solved it. The road paving, that
Right.
they put it back down at the road paving crew put it down at Indiana. And so you would get folks that would cross over in Illinois, then come down and immediately turn back down on Indiana. And then they get down there and there's like 5 and 6 cars stuck down there at the end and they're all
Can't
trying
go
to
anywhere. Right.
maneuver. So
And I join you in the tree concern too. You want to talk about?
yes, so I think that a couple of us have specifically talked about the East Pennsylvania and Ash and the trees that were removed there beside that business.
That big white house-looking business.
Yeah, and I know that they were moved for water sewer lines, but I feel like that we may have expressed enough interest to figure out how to plant something back there. And I don't, go ahead.
The main holdup right now is we have not actually finished the work related to it. That's part of our $5 million rehab grant project.
Okay.
That is just now getting started.
Do we have a timeline on that?
I do not have a final schedule. The notice to proceed is issued effective the 18th, and it has a 360-day allowable schedule on it, but it
Right. Will the ground be torn up? In other words, are we digging out old pipes or are we lining a pipe that exists underground and not upsetting the topsoil? Or are we about to wreak havoc on that street in front of businesses?
So the first step of that project is CCTV work by the contractor to verify that the lines that are there are something that we can just line without having to dig up. If we can, we will dig things back up. But if we get in there and there's a condition, joints are offset, something's going on, and the contractor says, you can't line it, then we have to dig it up.
Is there a prioritization schedule of what of that work gets done first? Like, where does that one fall? Have we prioritized what happens, or does the contractor just do it how they?
Contractor is responsible for schedule.
Okay.
And is the contractor responsible for notice of the schedule to the residents and the businesses?
So we work through that. Once we lay out, say, this is the actual work we're going to do, there'll be a rotating schedule that comes out every week. Basically says, this contractor will start being here next week, and that'll get updated.
And so at least in that area, this would be a good test case for whatever policy that, we ultimately decide to notify people. I can tell you how what I've seen in other jurisdictions is they actually take an envelope with the note and they put it in your door. And they'd usually do it days to a week before an event, even including a parade. And so when you get there, you don't have to be there. There's a note that's hanging on your door that says, this is happening and it will affect you, basically. And that seems to work. So, but back to the trees on the corner, there is a plan, I guess, to put something there, or there will be a plan to put something back.
I've taken Graham, who's a town arborist over
Yeah.
there, to look at it and try to come up with some options. I'm not gonna say I have a final plan, but we're looking at trying to figure out something that is not gonna create a future problem.
Correct.
Isn't gonna be a sight distance because you're right there at the intersection, but it's hopefully something that can help stabilize the ground and not have it just be kind of a weeded up mess.
Right. All right.
So that would
We
be,
have a goal in mind
That's a better word. You have a goal.
And that would be down Ash, not just at the corner of Ash and Pennsylvania. That's,
The only trees that were removed was on the corner of East Pennsylvania and Ash.
A lot of that was already kind of, I won't say a weedy mess, but the main bulk of the trees, I'm going off memory here, but I think was right at the corner. But because it's open, you can see the rest.
Yes.
well, all the trees were cut down. That's why it's open. There were trees there. There were trees all the way down that block. I promise.
We can look at Google Maps.
East Pennsylvania and Ash.
Yeah.
Going down Ash, toward New Hampshire. Yeah. And they were just executed. It was a tree execution.
That's a relative.
Well, we know what he needs for Christmas. Okay.
I'm glad to hear there's at least a plan. I thought we were told you couldn't plant anything because of the sewer line.
I'm just having issues.
No, that's fine.
That's all bullshit.
That's fine.
I'm trying to do this on a pad and like, you know what, forget it.
Okay.
Unless you
That's
really
fine.
need it, then I'll keep tinkering with it.
No, we're good.
No,
We
we're
don't
good.
need
My
it.
mouse at the Douglas Center. I haven't
Just-
been able to get it back. It's-
Okay.
Oh,
And-
I'm gonna buy another.
Well, Christmas is coming. If it's not taken care of by then, you have expectations.
That's all I've got there.
okay, thank you. And did you have anything else?
Now we're good.
Okay. Bill?
So more questions since James is here. You're very helpful. We get emails. I forward you stuff and you're responsive to the people. We got another email from Mr. Smith about his drainage issues. I know you said that issue was very, it wasn't black and white, but has some response been given to him? So if we're not the answer, he can know where to go next.
So Corey and James and I met out there with Mr. Smith last Friday afternoon. And another gentleman from the neighborhood came over and informed us actually that they had gotten permission. As it turns out, there's an infiltration basin from the original plans across from Mr. Smith. That's part of the design. It's how the stormwater's supposed to function. It is owned by the golf course, not the homeowners association. Another gentleman that showed up said that they had just gotten permission from the golf course owner to enter that property, and they were going to have a meeting with an engineering firm, all of those present believed to be LKC. They don't seem to know about it, so, okay, well, they were meeting with an engineering firm who was going to give them suggestions on what to do about it. Essentially, they have an infiltration basin, and if you drive Scotts Glen, you'll note that there's a couple curb cuts there with where the water is to run off. But as the trees have grown up in the basin and the pine straw has fallen over the years, et cetera, there's nowhere for the water to run into that basin now. It actually sits higher than the curb. So they're probably going to have to do some cleaning out there or something, but it's really between apparently the owner of the golf course and the homeowners there. It is not a town issue. The town stormwater is functioning as it's supposed to relative to it's flowing down the curb. It enters where we've got the cutout. Corey and his folks had dug it out recently within the right-of-way. But again, at the end of the right-of-way, there's nowhere for the water to go because the basin has got to get taken care of. So, and we've had some back and forth. We talked about the street paving out there. He's now got copies of excerpts from the paving survey, and we had a very good conversation and good follow-up with Mr. Smith.
Thank you. Yeah, I know we're not always the answer, but if we're able to help in any way, so thank you.
Thank y'all too. I meant to say that for following up on that. And I got, and the infiltration, does the golf course has an obligation to maintain that stormwater utility?
My understanding is an obligation to the town, no, because we are not a stormwater utility, and this goes all the way back to your 570 rules and your low development option that was chosen by the council back in the 90s. We do not maintain those stormwater management systems after they go in. You would be looking at and
level.
and this is another option if you ever run out of watershed credits. I'm not going back to that conversation all the way tonight, but you could go ahead and go for a higher density development option, become a stormwater utility, create a stormwater utility fund, et cetera, et cetera, et cetera. But I'm not recommending that at this point in time.
Sounds like they're working it out amicably, but maybe
Point out that section of Talmore was developed prior to the watershed protection. It was pre-93.
Okay.
So he may be obligated, but it's not to the town.
State homeowners.
Yes.
Deborah, did you have anything specific for the roundtable? Okay. No. Okay, so we're not going to adjourn our meeting. What we'll do is we'll move into closed session. We'll ask staff to step out. And then when we come back, we will vote on anything necessary from our closed session and adjourn. And I'll make sure I have minutes written for you. Is there a motion to go into closed session?
Can we take a
Closed session.
Second. Oh, sorry.
Say for a purpose? Closed session for purposes of personnel matter?
Take a quick break too to give everyone a chance to move around. It's 6:17. Let's be back at 6:25.
Yeah.